So first, welcome everyone for FinTech-Aviv Annual Summit. We have the agenda for you. It's been a while, as I said, since we've seen all of you here. So thank you all for coming, and for those who are joining us remotely. Also, we cherish your attendance. So we planned for you a really packed day with agenda on various topics. We'll have experts here from local market, from digital market, and different international markets. I'd like to welcome also Nir, my partner. We're going to start with a little background about what we're going to do today and some of the trends that we see for 2022. What we ask is several things. If you want to chat, if you want to mingle, that's great. Either outside or upstairs, there's a rooftop you can enjoy. If you're here, please be quiet so the other people here can enjoy the content as well. For the speakers, I ask to mind the time. I'll be waiting you for like a minute before we start each session, or we finish each session. So, ladies and gentlemen, welcome to FinTech-Aviv Annual Summit, and looking forward to a great event.
Hey, welcome. Yes. Perfect. So, yeah. So, we're going to start with a few words about the Israeli FinTech ecosystem, about the tremendous year we had in terms of fundraising for FinTech startups. 2021 was much better than the beginning of 2020, even though 2020, after the COVID-19 spread, had actually kind of recovered, both in terms of investments in FinTech startups and both in terms of integrations of FinTech startups and both markets of Israeli FinTech startups around the globe. So a few sentences about FinTech-Aviv and what we do. So I'm your Netzer, together with Tal, we lead Equitech. Equitech is a FinTech consultancy. We consult different financial institutions from one hand and FinTech startups from the other hand. We provide a bunch of services. You can see it on the board, but better and even more interesting than this, we lead FinTech-Aviv. FinTech-Aviv, as you probably know, because you're here, is the Israeli FinTech Association. For the last 8 years or so, we're hosting different conferences, meetups, and FinTech-related events. So we're happy to have you here with us today. Thanks for joining us for this one. This is actually the 8th year of our operations since 2014. And welcome to the annual summit. A few facts about the Israeli FinTech ecosystem. So maybe not all of you know, but Israel is ranked second in the world for investment per capita in FinTech. First in the world is UK, second is Israel, third is the US market. Actually, fourth is Singapore, which is a similar market to what we have here. We know that 73% out of the investments are coming from foreign investors. Israel is not a capital market, it's a tech market, it's a tech powerhouse, as we all know, and most of the investments are coming from outside. We have more than $8 billion invested in Israeli fintech since 2019. This is a huge number. And actually almost 3 just in the second half of 2021. So that's really crazy numbers. And 2021 was massive. It was really great for Israeli fintech investments and investments in general in high tech. We have more than 850 fintech startups operating in Israel. We have to say, there are some fintech startups operating from outside of Israel for different reasons, bunch of reasons, sometimes tax reasons. But these fintechs are led by Israeli entrepreneurs. This number does not include these fintechs. If you take a look at fintechs around the world, we'll probably find that are led by Israeli entrepreneurs. We'll probably find 1,500 or so. And of course, 90% of the fintechs in Israel, same as in general high tech, they don't really sell to Israeli clients. They export their solutions. So that's just a quick slide to emphasize what I just said. And we actually leading the NASDAQ. This is Israeli companies in general. A few notes about what we did in the NASDAQ and in IPOs. The SPAC phenomena that was here in 2020, 2021 still continuing. But 3 important facts and very interesting ones. So almost $26 billion were invested in Israeli tech in 2021. That's combined, actually that's combined the amounts of 2019 and 2020, that's even more than these 2 years together. $4.4 billion were invested in Israeli fintechs, and that's an uplift of 370% from 2020, which is a huge number and a very very impressive, very impressive one. And 70% out of these investments were invested in anti-fraud payments and insurtech companies. So the sub-segments of fintech that are most interesting probably for foreign investors are payments, anti-fraud, and insurtech. That's interesting to understand. And this is the last slide I'm going to show before I hand over the mic to Tal to talk about the latest fintech trends. Take a look at this graph. The left chart, investment in general high tech. Okay? And we can see the total investments in Israeli tech. We had 890 rounds, and the average amount was $30 million for a company. And the right chart is investments in fintech. And take a look at that. We had 104 rounds, much less, and the average round was $43 million. So that means that we have maturity in fintech. The fintech solutions in Israel are in later stages than the general tech. We can understand from this analysis that the ready-to-market products that are distributed from Israel are really massively interesting for the world to examine. And that's how we see that 90% from the fintechs in Israel are exploring real solutions. We have a huge interest from global financial institutions to integrate, to implement, to integrate different fintechs that are coming from Israel. So thanks very much for this. I hope you enjoyed today. And thanks for joining us again.
Oh no, you're gonna climb up the next slide. I have a lot of breaks. So I don't know if you know, but usually not that excited. But yeah, I guess it's been a while since I've been out here. So okay, I want to talk about three main trends, and we'll see it throughout the entire summit. So three main attributes for 2022 in payments, wealth management, and commercial banking. In wealth management, and we'll have several discussions about it later on with the IREX investors and with the E2. So hybrid advice unlocking new revenue streams. There's capitalization on the great wealth transfer. For those of you who don't know, the baby boomers is something that has been a bit neglected. They still generate $2.7 trillion annually, but nevertheless, most of the fintech applications are focusing on the millennials. Now, this makes some sense because millennials are using technology much better, let's say, or much more than the baby boomers. But still, it's not a market that should be underestimated, and especially in wealth management. The ESG impact and measurement tools. A lot of investors are looking to understand what exactly is my money doing. How is that? How am I impacting the general good? If it's a social impact, if it's employee-based impact, if it's governmental impact. In terms of payment trends, we see a growing phenomenon interest in central bank digital currencies. There are over 100 countries right now who are working on different kinds of currencies. We have the digital shekel, that is an initiative of the Israeli, of the Bank of Israel. Now, this raises a lot of questions. Will it be for the end customer? Will it be for bank to bank? How exactly is this going to work? So everything I'm talking about now, we're going to find out later on today. In terms of rise of open ecosystems, there's a lot of integration, and it really goes together with the economies of scale and consolidation. So we see a lot of M&As in payments, and in fintech in general, but definitely in payments, because the market is diverse in a way that every single player has a specific kind of market share, and consolidation makes a lot of sense when providing a very similar value. We just saw Credoax, I forgot their new name, being bought just now. So there are M&As all the time, and this is a major part of what we saw in 2021, and this will continue to shift in 2022. In terms of commercial banking trends, and this is my favorite topic in fintech, commercial banking. In my point of view, it's been most of the application have been focusing on the retail clients, not understanding that the commercial banks, the commercial clients can yield a lot of prospect. There's a lot of opportunities in commercial banking. We'll have a fireside chat with JP Morgan, with Z from JP Morgan. We'll talk exactly how they do corporate banking and what does it mean. But in terms of the rise of the real-time treasury management, adoption of as a service model and utilization, of cash flow forecasting. I think I know at least three companies that are just started in the past year that are focused on cash flow management. This is something that is a major obstacle for a lot of companies working with everything from hedging onto how do we even manage this? How can I every day make sure that my cash flow with all the currencies is being well balanced? And how do I get all the information from all the banks into one consolidation file? So most of the companies are still using Excel sheets where they should use, I'd say, more advanced technologies, and there are companies like Oval or PayEM that are really providing such services. So all these and much more we'll be talking throughout the day. And I hope you have your resilience and stay to your seat. So the way we're going to structure, we have keynotes, fireside chats, and panels. At 1 o'clock, we'll have a break and have some additional food. Feel free to eat and drink. Please try to maintain quiet so everybody can hear, especially the ones who are joining us remotely. I think it's a good opportunity to thank our great sponsors today. Major ones will start, of course, AWS and FinTech-Lab, who will show you, who will demonstrate exactly what they're doing and what's the value proposition. And I would like to start with our first session, which is a fireside chat hosted by AWS. So I'd like to invite Ilan Leifman. Hi, Ilan. Ilan is Senior Business Development Manager at AWS, and Matan Bam. Matan is the co-founder and CEO at Melio. Hi. Hi. Is there a microphone? Yeah, of course.
Good morning, everyone. Thank you, Tom. Thank you, Ian. First of all, thanks.
This works. I'll give you a 2-minute heads up.
Sure. Excellent. Thanks. Thank you, everyone, for coming, and thank you for the partnership, FinTech-Aviv. It's really wonderful to see the fintech community getting connected and in person and sharing knowledge together. So today, I'm very lucky and privileged to have Matan with me. Matan is the CEO of Melio and co-founder. I'll let him introduce himself. A bit word about myself. I'm part of the Amazon Web Services fintech here in Israel. I'm a business development manager working both with venture capital firms and fintech customers. Maybe Matan, you want to introduce yourself and then we'll kick it off.
Sure. So thanks for inviting me, and I'm really happy to be here. Thanks for coming. So my name is Matan, and today I'm the co-founder and CEO at Melio. Before starting Melio, I was with PayPal, being its consumer payments business, P2P payments business globally. Anything related to friends and family payments, like paying back for coffee or sending money to my family abroad. I was part of my group. I'm proud to say that a big part of the group was here in Tel Aviv and some in San Jose and different countries across Europe. Before PayPal, I had another payments company that I think we'll also talk about that got acquired by eBay Inc. At the time, eBay and PayPal were the same company. So my company got acquired after 3 years of operation. That's how I started my real journey in payments with this startup, with PayPal, with eBay, and today with Melio. Thanks again for the invitation.
Excellent. So let's kick it off with a bit of history, or your history, right? Because you've been in the payments world in fintech for before it was called fintech, right? So the Gifts project, then PayPal, and today Melio. And I've heard you several times talking about what excites you about this world and the world of payments and the world of money, right? Can you tell us a bit more about what is that thing that drives you and you find so exciting about payments?
Yes, definitely. So there are many things that excite me about fintech, and yeah, I sound old. Like I was in this space before it was called fintech, where it was just I don't know, finance startups. But yes, but more seriously, there are two things that really excite me around fintech. The first thing is it might sound basic, but money is important to people, and when you make money better, then it makes a real difference. I think that the first time I really saw that was with PayPal. I led a team that was building products for the underbanked and unbanked population in the US. For those of you that don't know what this means, I didn't know what it means being an Israeli citizen. These are US citizens that don't have any access to financial services like a checking account or getting a loan, or they have like partial access. So they need like, I don't know, payday loans or these different like check cashing places to compensate on the lack of access for financial services. So we build different products to create financial inclusion and democratization of financial services so that any person can actually access financial services. And seeing how small changes make such a huge impact on families and individuals made me really like fall in love with the space. And I'm talking about, you know, simple things like a family that lives in the US that sends money to their family in Mexico every month so that they can pay their bills. When you shorten the time to send money from, I don't know, 3 days to 2 days even, or 1 day, it's a world of difference, especially for consumers and also for small businesses. Like getting paid faster is something that is a huge deal. Of course, cost optimization, delivery, enabling choice, these things just change lives. So I really, I think for most people, money is in their top 3 priorities. Of course, health is #1, but money is somewhere in the top 3. So when you make it better, you make a difference. Now, I don't want to sound like that I'm only an idealist. I think fintech is a great business. And that's also something that drove me to spend most of my time that I'm awake on this, because I think the thing that I liked about fintech, and when I started Media, I was thinking about different concepts in different industries, but fintech has a very clear business model. Across most startups, people and companies do things differently, and that's how they become better or different. But at at the end of the day, it's a very clear business model with a few very clear monetization methods, with a lot of innovation in terms of the how. But the what, many times, is clear. And I think for a company that I wanted to start, I wanted a very clear business model from the start.
Nice. So let's talk about the beginnings of media, right? There's this famous quote for those who know Y Combinator from Paul Graham, who's one of the co-founders, saying that startups should build things that don't scale in the beginning, right? Like famously Airbnb did and so on. Can you share with us how did Melio get started, and how did you learn about kind of the inefficiencies in the SMB and SME space in the US?
Yes. So I guess one story that we're really proud of at Melio is that when we decided that we want to enable small businesses to pay their suppliers, which is what Melio is focused on today. So we are a supplier payment solution. In simple words, we enable a restaurant owner to pay a coffee bean supplier. We enable a legal firm to pay its catering service. There are trillions of dollars that are being transferred every year just domestically between businesses in the US, small businesses in the US. It's a major opportunity that really attracted us, and we wanted to enable it. We realized that the main method that small businesses use today across most industries is a paper check still, or the bank's bill pay. The bank's bill pay is basically like a very basic archaic experience where you log into your online banking, like you log in here to Bank Poalim, let's say, and then you have a very simple, basic way to send an ACH, send a bank transfer. That's it. So if you talk with any small business, if it's a restaurant owner, a construction company, a medical clinic, no matter which industry, you usually get the same answer. I either stuff envelopes and leak stamps to mail checks. Sounds crazy, but true. Or I use the bank's bill pay. Some use an accounts payable solution, but these are very few. So we wanted to basically digitize this space. I came from the world of Venmo, the world of P2P payments, where consumers around the world were shifting from cash to mobile payments. And so I thought it's just crazy that businesses still haven't shifted their payments to digital like consumers, and it's the same people, right? Like, so we talked with a cafe owner that is using Venmo to pay a friend. They're using Square as a fancy point of sale with rotating iPads, but then they go to the back office and actually lick stamps and stuff envelopes to pay the tomato supplier. So it's the same person, and so we realize that there's a big opportunity, but of course, we're not the first ones to discover it. We're not the 1,000 company to discover it or 10,000 company. So we wanted to understand why. And we had no idea about bookkeeping. We had no idea about B2B payments. Consumer payments is a very different world still. So we said, okay, let's build the product. But to build the product in our space, it will take us some time. We need to partner with the bank and a processor and go through a due diligence and have an AML program. Like at the end of the day, we are a payments company. It takes time to set up a payments company. So we said, okay, we can't wait for so long. And that's now I'm getting to your question, which is we said, let's launch something next month. And we basically launched a bookkeeping firm in New York. That was our first product. We hired Dafna, that was our bookkeeper as a service, and she served 10 small businesses for around 4 months, where she did everything for them, from mailing checks for them, to updating their QuickBooks or accounting software, to handling edge case with suppliers, everything through WhatsApp or iMessage. So basically like a juice place called Juice Organic in New Jersey would upload an invoice through WhatsApp, tell Dafna when to pay, how to pay, and she would just do all of it manually. This exercise of forming a bookkeeping firm that does payments for our clients really accelerated our understanding. It's not, I know it sounds like a nice story, it's a real story. It's nice, it's a nice story, I think, but it's also a real story that truly accelerated our the accuracy of our MVP. So that's something that, of course, couldn't scale. Dafna, by the way, is our VP customer support.
I was going to ask for Dafna's WhatsApp number for those who have a business.
It's actually a good product. It was a good experience, yeah.
Cool. So effectively, I mean, there's in the back of all what Media has built today, there's a new infrastructure, right? The payments infrastructure. You modernized it, right? The rails for those small businesses. Can you talk a little bit about what's the solution, right? So that was the problem you identified. How did you modernize those rails, and how are you facilitating all this transfer of money digitally these days?
Yeah, so we did two things well, or we do two things well. We decrease friction and we increase value. And so what this means is that there are many accounts payable automation solutions out there. These are the tools that help a business pay its suppliers. The name of the category is called accounts payable automation solutions. What a terrible name for a category. Like, think about it, accounts payable automation solutions. And so the reason the name of the category is actually an indication of the problem, because most of the tools out there, which are really great tools, also there's one incredible company in Israel called Tibalti. They're doing an amazing job, but these are tools for finance teams. That's what they are built for. They want to make the finance team life better. And Tibalti and Bill.com and Avid Exchange, all these great companies, really very successful companies, they target a finance person, an accountant, a CFO, and so the experience is a back office system for finance teams, and that's how it looks. It's not the best UX, it's not Airbnb, I promise you, in terms of how the experience looks like, and it's actually not that important for them. They probably have more important things to focus on, because they do on-site training and tutorials and different guides that someone needs to read before using the system. We're a consumer company. We target a restaurant owner. They're not a CFO, they're not an accountant. We need to build something that is as simple as Venmo. And that was the intention since day one. That's what we're still focused today. Of course, it's very hard to do something simple, but it is a self-serve, self-explanatory experience where you sign up and start paying all of your suppliers without fancy accounting terminology or different functionality of approval workflow between departments, because a restaurant doesn't have departments, or a wine store doesn't have departments. So it is really accurate, and we decrease friction significantly. On the other side, it's the value proposition. The value proposition of accounts payable automation solutions is automation, as the name suggests. They help you automate tens of thousands of payments, which is a great value proposition for the CFO of Nike, because it helps achieve operational excellence and decrease costs, etc. But again, a wine store that has 100 payments a month, it's okay, like automation is nice, it's just not a strong enough value proposition to make me shift from something that I'm so used to, like stuffing envelopes with checks, to a digital solution. Because checks work, and shifting from some to some other tool, business owners are busy, so not a big deal. So what we did is focus on the one thing that small business owners care about most, which is cash flow. And when you talk about cash flow, small businesses listen. And so our payment solution is not focused on helping you automate the process, because you have 100 payments a month. What we do help with is cash flow. And we do it in various ways, helping both the payor and the payee with their cash flow needs. And the combination between our cash flow, which is a strong value proposition, and the decreased friction, the ratio between value and cost became better than most. And so small businesses made the shift. Easy to shift, you get a stronger value proposition.
And indeed sounds easy when you talk about it, but to see the growth of Melio, to see that product market fit, that's why I wanted to go back right to the initiation to really think from a customer perspective on what is the problem you're trying to solve and master that. And I think Melio, we've experienced that. We've seen your growth from AWS and see that growth. Like usually these days we would read the news, right, and see that many millions of dollars are being invested in Melio and valuations and whatnot. But behind that, there's people, there's scale, there's the processing, payments, and the volumes that you guys are managing these days. It's something that nobody could have imagined maybe 2 years ago, right? When you started, maybe 3 years ago. Is there any data point, without compromising you here in front of everyone, that you could share with us with regards to your growth in the last couple of years?
Yes, sure. And yeah, scaling has been, was probably obvious, but scaling has been the major focus, the biggest challenge to support the scale. And I can share, and this is already becoming public information, or soon will become public information, but we grew from the beginning of 2020, like right before COVID, let's say February, March, we processed $20 million a month. And we finished 2021, let's say less than 2 years after, with around 1.7 billion a month. So we're now processing tens of billions of dollars, and we were really at zero, like close to zero, like 2 years ago, or a little over 2 years ago. So really from zero to tens of billions of dollars in, let's say, 2.5 years, all in all. And yeah, during COVID, the acceleration happened. It wasn't just due to COVID, it was also due to COVID, and the digitization that businesses went through because of the new constraints they had to face. But it was also because of Melio becoming more and more of a platform. So Melio, we enable accounts payable and accounts receivable, we enable vendor payments, but we enable it to partners as well. So for example, if you log into QuickBooks, which is the leading accounting software, then when you make a payment there, you're making a payment with Melio. And when you're making a payment to a vendor through Capital One, you're making a payment with Melio. And we'll announce a few additional partners very soon, but we became a B2B payments platform, if you will, like a Stride focused on B2B, and that also contributed to the growth. Now, the scale, and you mentioned AWS, but it's we're always very grateful for the suppliers and businesses that we rely on. Melio relies on around 400 businesses every month. AWS is one of them, and in order to become a leading payments platform, business continuity, redundancy, and of course different SLAs is not just important for us in front of our customers, but we cannot win deals and partners without that level of service, business continuity, redundancy, and of course support to the scale. And so AWS served a critical role in us winning deals and also just, not having the privilege of not having a server room. I know this is like an anecdote from the past, but it is something that we're still grateful for. It's like when I go on a plane and there's Wi-Fi, I'm still not used to it. Like this is still new to me. I'm very grateful that there's Wi-Fi on the plane. So I think really like having a cloud solution that is scalable really helps us win these partners and accelerate the business beyond the actual infrastructure.
Thank you for that. Maybe I think we have time for another last question. And I would like to take this. This is a very interesting way when Jeff Bezos, when somebody asks him, what do you think is going to happen in 10 years' time, right? What's going to be new? What would you predict? And he goes back to first principles and says, instead of thinking about what is going to be new in 10 years, let's talk about what's not going to change, right? And so for Amazon.com, that is, customers will always want low prices, customers will always want vast selection, and customers would like, fast delivery. That's not going to change in 10 years, probably, right? And so using that framework, I would like to ask you to conclude here, what are those things that you feel and that it's not going to change in the world of payments and in the world of SMB payments? If there's something that you think it's just the first principle that it's just not gonna change over time?
I can think of a few things, but I'll say if we talked about cash flow, then I think one thing that will never change is that business buyers will always want to pay as late as possible. Business suppliers will always want to get paid as fast as possible. That will always be the case. And that conflict of interests, where one side wants to pay slow, the other side wants to get paid fast. That's the nature of the transaction, and that will always remain. The interesting thing, though, is that now it dictates different payment preferences, and there's more choice to enable this fundamental truth. And so there are more ways to defer a payment, there are more ways to pay, period. Like I think we have a stack that you can pay in 15 different ways. I'm not even talking about wallets, like just different technologies that we're integrated with, and even more on the delivery side, from mailing a paper check that we do, to sending a virtual card, to doing an international wire with effects, without effects. There's really an endless, so I think choice will change, but the fundamentals of one side wants to pay slow, the other side wants to get paid fast, and how we enable it, not necessarily with credit, by the way, but just with payment choice, I think could be a solid foundation for many product innovations that you can rely on.
That's a great takeaway from the session for all those founders thinking about where and what to build going forward. So thanks a lot for your time, Matan, and for sharing all these amazing insights. Thank you all.
Thank you very much, Ian. Thank you, Matan. It's always a good thing when you need to pull out some more cheers. So we're doing that. Our next keynote session, I'd like to ask Sydney Grossman, CEO of the FinTech Innovation Lab, for keynote. Would you like? Okay.
Okay, good morning, everybody. My name is Sydney Gottesman. That was a great story from Matan, and hearing about a payment startup at scaling. I work for the FinTech Lab. I lead the FinTech Lab, which is a joint venture between another small payments company called MasterCard and a global energy company called Enel.
Sydney?
Yeah.
One closer. Yeah, and this works. Perfect. Right. Okay, I'll give you a minute.
So before we get started, I'd like to start with something personal. Many years ago, 35 years ago, when I got married, I promised my soon-to-be wife that we would move to Israel. Soon after getting married, the first thing we have to do like Matan said, save a little money, have kids, save a little money, buy a house, save a little money. 35 years later, I'm still trying to save a little money. But with the help of the one above, last week, my wife and I made Aliyah. The picture isn't the best, but let me tell you, Aliyah is not easy. But I also learned that with us today is another Oleh Hadash. Here's David Engel. David also. So I would say, isn't it remarkable? And I think it's a testament to the year that was near and Tal described earlier. Israel's a happening country. Israel's a company for innovation, fintech, and cyber, and payments, etc. And it's attracting people coming from outside the country to join as immigrants. And my wife and I are delighted to be here. So I was going to talk a little bit about industry trends in 2021. I think with the introduction that Nir and Tal gave before, I'm going to skip that. And I'm just going to jump and say, why did, for all of those reasons that were described earlier, MasterCard and Enel decided to join forces to create the FinTech Innovation Lab? And along with all the other successes that we had in 2021, we also had the ribbon cutting event of the FinTech Lab in Beersheba. I'd like to share with you the highlights.
Use the microphone, because otherwise people at home will see it. Pretty.
State of Israel.
We are super excited to have all of you here to celebrate our grand opening of our lab facility.
Since the FinTech Lab opened earlier this year, we've had over 100 applicants to the lab. We've screened 33, and 5 startups have joined our program. We hope that the FinTech Innovation Lab will be a center for education, for research and innovation. There's another reason why I'm super excited about the FinTech Lab. Simply stated, it was going to change my life.
It's very clear why Israel is leading in the space of cyber innovation. It's very clear why so much investment is coming into the country. There's an energy here which is really, quite frankly, I have not felt this anywhere else in the world.
In the FinTech Cyber Innovation Lab program, we are able to support innovative development of financial products and services, and by that promote Israel's leadership in the FinTech and cyber fields.
Why the FinTech Lab? One of the many activities that NLX does is serving the big NL in managing some of their customers.
Israel for innovators is like Disneyland for kids, an amazing place where we can nurture our creativity, enhance our passion, and implement innovation, real innovation.
What we're going to do here, and we begin to do here, is to build the solutions to make sure that mankind, and that's our vision here in Beersheba, to help mankind, to help the world to be a safer and better place to conduct business, to purchase, to make business exchanges of everything more connected, more bringing people together in a safe and secure way. And this innovation lab is one of the major steps.
Today is a day of celebration, celebrating the great innovation that will come out of this lab, and the fact that many new startups will succeed from Beersheba. This is something that we also want to celebrate today, and I'm sure that eventually there will be a great boom coming out of Beersheba as a new high-tech hub for the country and for the world.
היום אנחנו חונכים את הפרויקט הראשון מסוגו של קישוריות בין גופי ממשלה לבין גופים פרטיים. מוצרי פינטק במרחב הפיננסי הם עובדה קיימת שרק תלך ותתעצם.
שבוע שעבר חגגנו את יום בן גוריון. מבחינתי זה אחד החגים הגדולים ביותר בתולדות מדינת ישראל.
אני חושב שרוחו של בן גוריון שורה כאן באוהל הזה. ובן גוריון רוצה להגיד לך ולכם עד כמה הוא גאה בכם. אתם רשומים בספר הזהב של מדינת ישראל.
I get goosebumps every time Mayor Ruben Danilovich says I'm part of the Golden Book of the State of Israel. So it's a wonderful story. So let me tell you a little bit about the FinTech-Lab. We're an innovation authority sponsored franchise labs in Beersheba focusing on cyber and fintech. We have a 3-year franchise from the Innovation Authority with an opportunity to renew for another 3 years. We're located in the Gadian Mega Technology Park, which is a center to tens, if not almost 100 cyber companies, fintech and cyber companies with expansion football fields wide planned growth in the areas. We feel we're getting at the ground floor, as it were. What's the business model? What's the business model of the IIA Innovation Lab in general? It starts with the startup on the left. They're an early stage startup. There's a focus on early stage startups is able to apply to the IIA for a grant up to $500,000 shekel. That grant needs to be spent in conjunction with the IIA Innovation Lab, in our case with us. We would provide services such as, which I'll describe it later, mentoring, completing the proof of concept, networking, connection with our shareholders, etc. And in return, the Innovation Lab gets a small piece of equity in the startup getting in at the ground floor. Our focus areas. These should resonate very clearly from some of the topics that were mentioned earlier in terms of investments happening in Israel, cyber, digital. I would highlight digital security, and obviously on the lower left, fintech platforms, digital wallets, open banking, and crypto, as well as anything in the area of fraud prevention on the bottom center. Here's our team. I've been with MasterCard for 10 years. Thanos Mathiopoulos is our Chief Business Officer. He comes from Enel. Yafat is our Business Development Officer. Sharon is our Operations Manager. Raul is our CTO, and Sadir, our Solution Architect. They'll please get a chance to meet with them, and you'll be hearing from Yafat. What's the value proposition of our lab? So we provide it in 3 pillars: business support, technology support, design partnership. We provide office space, mentoring from our lab staff. We're able to provide access to funding, both from the IIA as well as our own. We provide access to technology, to data as appropriate. We do a comprehensive solution architecture with the startup, and we work with the startup to complete proof of concept to bring their product to MVP. With connections to our shareholders, we're able to provide subject matter expertise in certain areas. We connect them to our partners in the government, the IIA, National Cyber Directorate, and the Ministry of Finance. So let me just touch on quickly a little bit about our shareholders, which is a really unique opportunity for an early stage startup to deal with global companies. First, Enel. So Enel is the world's #1 producer of renewable energy. Millions of customers, thousands of employees. They operate in 34 countries. And I would add, they have an award-winning global innovation program called Open Innovability, which has like 15 labs and hubs around the world. Enel X in financial services is a diversifying business unit of Enel going into financial services. The Enel X model is twofold. First is to assist customers to get more sustainable and efficient use of energy, which may not be as relevant to this group, but also creation of new value through new products and services. Those products and services would be across business to government, B2B and B2C. And you see on the bottom, maybe you can't see it, in financial services, they're looking for a common technology to provide against all 3 pillars. A little bit about MasterCard, a small payments company. So MasterCard switches over operates, I should start here, in hundreds of countries, connects thousands of banks, millions of merchants, switches hundreds, millions of transactions with a gross dollar value in trillions of dollars. There are over 3 billion MasterCard's logos issued worldwide, and we make billions of dollars in net income. MasterCard also has a global award-winning innovation program called StartPath for later stage startups, which has taken through over 250 startups in the program, and those startups have gone on to raise $3.some billion. I want to touch on MasterCard. Very often we are told that MasterCard is a credit card company. That's not the case. MasterCard is a technology company. Our core value is pay to merchant, very similar to what Tom was talking about in other areas. We perfected and scaled the pay to merchant payment process. It's a four-party model because it starts with the cardholder, the merchant, the acquirer, and the issuer. I'll just step through it quickly. The process starts with the cardholder wants to buy something, a cup of coffee, a TV, book a flight, and they give the card to the merchant. The merchant has to know whether the cardholder is good for the money, so they send it to their bank called the acquirer. The acquirer forwards it to MasterCard, MasterCard forwards it to the issuer, and the issuer says, yes, Sidney Gottesman is good for the money. So they return a response and they say, it's all the way good, the payment is guaranteed, and the merchant can give the coffee, the TV, etc., and everybody's happy at that point, right? There's one more step, I forgot. The issuer says to the consumer, pay me. So that may be the consumer is not so happy he has to pay, but eventually that's the process that's done billions of times a year. I should add that this process is also used for ATM processing to retrieve cash from ATMs. In Israel, it's a little bit different. In Israel, both the acquirer and the issuer are Israeli companies. There's a little bit of a different route on the left, which is using, you might have heard of Schwab, Shebrut Bank Automatic, and Schwab kind of does it without the benefit of MasterCard, but if it's a foreign card making a purchase in Israel, it follows the path I mentioned earlier, the payment flow on the right. MasterCard's strategy, I'll just touch on it quickly, is to expand in payments. What Matan said earlier is absolutely true. The payment merchant category we can cover is a small segment of the total payment ecospace, disbursements, government payments, cross-border payments, etc. So we want to expand in payments, extend in services, covering others. Business models such as cyber, artificial intelligence, and lastly, to embrace new networks such as digital identity and open banking. We've done a series of acquisitions. I'll touch on a few of them. Finicity in 2020 is an open banking platform that enables our banks, our customers to deploy open banking. In 2020 also, we acquired a small cyber company called Strategic based in Israel, which does cyber risk assessments. In 2021, at the end of last year, we acquired CipherTrace, which is a crypto risk management tool. And finally, in 2021, we acquired the Dynamic Yield, which is an Israeli-based global company that does the digital consumer experience. We believe that we're the partner of choice for early stage startups, for startups in general. The FinTech Lab is focused on early stage startups. The StartPath program, which I mentioned earlier, is focused on later stage startups. And we also provide services such as FinTech Express, which enables a startup to receive a license for money for payments. And finally, in the center of the bottom, we have an open banking platform, an open API platform called Developer Zone. You're able to get APIs for payments, security, loyalty, data, etc. So come join us in FinTech Lab.
Thank you very much, Sydney. For those of you who don't know, we have FinTech Lab with us, or Sydney, with the rest of the team as well. So we'll have later on fireside chats with one of the companies that are working with the FinTech Lab. So you will get some more feedback also from the side of the companies. Next up, let me change this. Okay, for our next session, we'll have really great panel. So we have four panelists with us. I'd like to invite David. Hi, David. So David is Senior Business Development Manager in the AWS for EMEA. That works. Perfect. We have Daniel Leon. Hi, Daniel. He's the co-founder and CEO at Celsius Network. Idan, hi, good to see you. So Idan is CEO and co-founder at Fireblocks, and last but not least, we have Uli, right? Yeah. So Uli Kolonki, co-founder and CEO at Starbucks. Yeah, we have two microphones for you to use. We don't need to sit that close to each other. I mean, let's mix it up a little bit. Yeah, so I think you have one for you and one for you guys.
Everybody can hear me? Okay, yes, thumbs up.
No, we need.
You need the microphone?
Yeah.
I have a very loud American voice. Okay, understood. Okay, thank you very much, everyone, and thanks to the panelists. As you said, I'm Dave Engel. I'm the FinTech Business Development Manager for AWS. I've been here for a week. As Cindy said, I'm Ole Hadash. I've moved here with my wife, my two kids, and my dog. And so far, we're loving it. Everybody's been very generous. If anyone wants to, yeah, so far. The kids started school this week, so we'll see at the end of the week. So yeah, if anybody wants to come and introduce themselves, I'm very new, so I'd love to meet you. My role at AWS is to accelerate the growth of our FinTech customers. So we really focus on helping them acquire customers, accelerate their product roadmap, acquire investors. So please come introduce yourselves, talk to me about how we can help accelerate your growth. And the other thing we do, obviously, is try to help our best customers tell their stories. And in particular, we're very fortunate to have a panel here to talk about decentralized finance, which is both strategic focus for AWS and a personal passion for me. So let's start very quickly. If we could have the panelists introduce themselves, and then we'll get stuck into it.
Hi, I'm Uri Kulotny. I'm co-founder and CEO of StartPlayer. We're an Israeli company. We develop scaling solutions for permissionless blockchains using a technology called zero-knowledge proofs.
Hi everyone, I'm Idan Frat. I'm a CTO and a co-founder at Fireblocks. Fireblocks is the largest infrastructure provider for digital assets. We have over 1,000 enterprise customers using our platform to do anything around the digital assets, from digital asset custody, transfers, treasury management, and of course, DeFi.
I'm Daniel Leon. I'm one of his customers. I'm the co-founder and chief strategy officer of Celsius. Celsius is a global fintech company. It's also a problem. That manages $21 billion for 1.5 million customers all around the world. We're providing various financial solutions and services, many of which we'll discuss in this one.
Wonderful. So the purpose of this panel really is to help demystify what decentralized finance is. We're very fortunate to have these panelists. I don't know if people recognize, but this is like, I'm a soccer fan. So for me, this is like having like Messi, Ronaldo, and Neymar. Like this is some of the best in terms of DeFi companies. So we're very fortunate.
Can you do it in the NFL?
I like soccer and cricket, which is which I understand doesn't make sense to me. To me, NFL is too slow. But anyway, that's a conversation for another day. So just to level set with the audience, if we can have people show hands. So first of all, raise your hand if you know what DeFi is, decentralized finance. Raise it high, because we're gonna, okay. No, keep your hand up, please. Okay, keep your hand up or raise your hand if you own crypto, assets. Okay, so not so many. Okay, keep your hand up. Nope, not done. Keep your hand up if you own stable coins. Okay, where are you? Okay, keep your hand up if you have staked a crypto asset before. Okay, we're getting now to count on one hand. And then keep your hand up if you have lent or borrowed one of your crypto assets. Okay, so we're really at the beginning here. Okay, good. At least we know, that's a good start. Okay, so what we want to do just to begin with is we're going to start from a customer perspective. What is the customer experience for our panelists from decentralized finance? Daniel, we'll start with you. You're at the very, very top end, providing the retail user experience. Can you please explain what is a Celsius customer's experience of using the Celsius app?
So you download the app, you go through KYC. It's very important for us to know who you are, where you come from. So we're asking you for basic information, passport, ID, proof of address. We work in 140 countries. After you provide us all this information and we validate that you are who you say you are, we'll give you two options. If you have crypto, you can move your crypto from wherever you entered, Coinbase, Kraken, into our platform, or you can buy crypto on the platform. Don't try it in Israel, which we're not working there at all, and we can discuss this later. When you deposit your crypto with us, when lawyers don't like me to say the word deposits, because then the banks are going to say that I'm a bank, so we see a problem. When you give me your crypto, when you lend me your crypto, you have two options. Either start earning interest, and the stable coins we pay between 8 to 12% interest, or if you give us any other coins, it depends on the interest changes on a weekly basis based on supply and demand, and we can pay between 4% to 70% depending on the crypto assets, or you can also borrow fiat against your assets. So if you want to borrow $10,000 from us, we would expect you to deposit or stake with us $30,000 worth of crypto. The whole idea is when you think about your typical bank, if you were to go to any one of the banks, I'm not going to name names here, all of them act the same. You're going to be lucky to earn 0.5% on your savings, and you're going to be extremely lucky when you borrow money from them to borrow 8% to 12%. With us, we're flipping the model. When you lend us your money, when you deposit, you can earn up to 10% or even more. When you borrow from us fiat, you can borrow from us at 1% and lower. The idea is the mission that we have, the mission that we are, for which we established this firm, is to bring about financial freedom to billions of people. And the only way to do this is to give power back to the people, to make sure that what banks used to be years ago is what they can be today, powered by blockchain.
So the obvious follow-up question, how do you afford to pay 8 to 12% interest when banks are paying a fraction of a percent?
I don't have to invest in private jets or buy these big buildings or pay myself millions of dollars, if not tens of millions of dollars of salaries. We've proven time and again that we can. And in fact, the last 2.5 years, 3 years almost, we've paid our customers $1 billion in interest. $1 billion in interest. This is a company that was formed at the beginning of 2018, and we've paid close to 1 million customers $1 billion in interest into our foundation. How? Very simple, supply and demand. When you lend me your coins, there is someone else on the other side that is willing to borrow your coins from you. And that someone else, that institution, that exchange, that hedge fund, you name it, would pay me between 10 to 15%, and then it's incumbent upon me to take 80%, up to 80% of that and pay you, the customer. I can keep 80% for myself, but we've taken that typical hedge fund model and we flipped it on its head. And what we have essentially built is a hedge fund model for the people, not for the richest people on the planet.
Okay, so what we're talking about now is building up effectively a crypto lending or crypto asset marketplace. So I'll pass over to Don, please. Can you talk about Fireblock's role in facilitating the staking or lending of crypto assets?
Of course. So as I said, Fireblocks is a B2B solution. What it means is that eventually our customers are companies like Celsius, but it can be any business that wants to step into blockchain and into all the layers that you have on top of blockchain and different financial operations that you have on top of digital assets, staking, DeFi, payments, and so on. And the way it basically works is that a company like Celsius uses Fireblocks as the underlying infrastructure that allows them to do any operation on the blockchain. So if an end customer of Celsius lends or borrows funds and puts them on his Celsius account, eventually behind the scenes, what happens is that Celsius uses Fireblocks as a treasury management platform to custody the assets, to stake the assets, to the operations of DeFi. And this is how basically they get the interest rates and the investments that they do on the blockchain.
And can you just talk a little bit more about who you are connecting to? So when you say that you're holding the assets, you're then connecting to the lenders. How does that, who are you actually connecting to, and how does that work so that you can help Celsius deliver those yields to their customers?
Of course. So Celsius themselves are eventually are act as lenders for other institutions that also some of them or most of them may also use the Fireblocks. There are two types of lending on the blockchain. There is this type of lending that, and I'm talking about between enterprises and enterprises. One is peer-to-peer lending, which happens directly between companies like Celsius and other companies that are on Fireblocks. Some of them are outside Fireblocks. We have a layer on top of our platform called the Fireblocks network, which allows those entities to connect to each other and in a very easy way, really for the, I wouldn't say for the layman, but for anyone that doesn't want to understand the underlying technology of the blockchain, to connect to each other and to do lending and borrowing and other types of settlements. There is another type of lending and borrowing that happens on the blockchain, which I think is even more relevant for the title of this panel, which is decentralized lending. So eventually when a company, a centralized entity like Celsius, has funds of their customers, some of the assets that they eventually lend is not to other enterprises, but to DeFi protocols and DeFi services. And the way they do it is also through Fireblocks. They have their Fireblocks wallet, which they put their funds and their customers' funds on, and they use Fireblocks in a very secure way to tap into all this decentralized lending platform and get interest out of that.
Thanks. And I think that it's a really fundamentally important point that really what we're talking about is the remodeling of capital markets. Rather than having to go through central banks, global central banks or national central banks to do the flow of capital, we're actually now talking about doing it peer-to-peer or through particular companies, which is a fundamental shift. And we can talk a little bit more about what the impact of that is. So we pass to Yuri now, talking about capital markets. Can you, using the example of your customer DYDX, can you please explain what DYDX does, why they use Starkware, and what the impact is on their ability to effectively use Starkware to do rollups, and how that's impacting their ability to facilitate these capital market transactions?
Sure. So DYDX is an exchange that offers customers the ability to engage in derivative trading. Specifically a type of derivative called a perpetual contract. And they previously operated directly on Ethereum, what is often referred to in the industry parlance as layer one, directly on Ethereum. And on Ethereum, because it is a very scarce computational resource, one of the ingenious inventions of Ethereum is introducing this digital resource called gas, which one needs to buy in order to transact. And DYDX customers were spending somewhere in the vicinity of 250,000 to 300,000 gas per transaction. If you ask how much is that in dollars, that depends on supply and demand, but that is many, many tens of dollars in transaction per transaction. And so when we first approached them, they said, we're fine, there's no problem here. We're spending about 20% of our revenue on gas. We're picking up the gas to have our customers, but we want to protect ourselves. So in fact, we're limiting customers to transact at a minimum transaction of $7,000. Pause there for a second and imagine you have a digital business. Okay, so the marginal cost for you is effectively zero. And you are limiting, there's inbound traffic, right? There's customers banging on your doors and you're turning them away because they're not willing to trade sufficiently high. They launched on our software stack, and we can talk in great detail about what that does, but it's effectively a compression service, if you will, often referred to as a rollup. We've reduced their gas per transaction by a factor of 700. So from about 300,000 gas per transaction to less than 500 gas per transaction. So that's one thing that we did, which of course immediately impacts the business in a very profound way. But beyond the sort of the raw scaling of the business, which matters a lot, one thing they could do, and they actually chose to do, which was a very wise decision, was to re-architect their system to benefit from our technology. So because of Ethereum's gas constraints, once you deploy a program, often referred to as a smart contract on the blockchain, it has to abide by those very, very stringent gas constraints. And so from a computational perspective, it's quite a bizarre entity. They could rebuild their system on our software stack like any software engineer would build it, and what they got was not just a more scalable system, but a far more capital efficient system.
Thank you for that. I mean, if we use the example of MasterCard who was on before us, really it's like without Starkware, it's like MasterCard saying to their customers, unless you spend $10,000, we're not going to accept the transaction because it's just too expensive for us. And the same thing for DYDX. If people were trading under a certain amount, they just said no because the cost was too high. With Starkware, where they do these roll-ups and basically reduce the gas fees by 700x, all of a sudden, effectively, it's now democratizing the ability for derivatives traders to do much, much, much smaller transactions with a much more high frequency. Just staying on that, can you just talk about your partnership with Immutable X? I think it's really another neat example. It's not DeFi, it's video games. But again, I think it's a really great example of the power of what rollups are allowing consumers
So
to do.
it's not video games. Well, they came from video games, but it's an NFT platform. And most of the use cases we've seen for NFTs to date are in the context of art and gaming. But there are actually very interesting use cases for NFTs in DeFi, including, say, Uniswap version 3. There's very clever use of NFTs. We've done essentially the same thing there to, I think, even more dramatic effect. We've reduced the gas cost of minting NFTs by a factor of about 20,000. So this is, I always find myself saying this is not a tweet and this is not a blog post. This is data from tens of millions of NFTs minted on Ethereum. So live data from a deployed systems.
Thank you. So we've got two companies here who are working with blockchain, but really with centralized finance companies. We've got Starkware who works with decentralized finance companies. I just want to drill down a little bit on what that actually means. So Daniel, you spoke before that you do KYC, you abide by regulatory requirements. Can you talk a little bit about what it means to be a DeFi platform, but working in a centralized or working in a regulated infrastructure or ecosystem, I should say?
Look, our customers don't care. If it's DeFi, if I invest in real estate, when sheep, they just don't care. What they care about is knowing that when they provide us their liquidity, when they lend us their coins, we know what to do with those coins, with the safety and security and the risk management processes that we have in order to prevent the right? The challenge with many of these big acronyms is that they're very confusing to the person who just wants to say, I'm looking for an alternative to my Bitcoin. He doesn't want to deal with hashes and doesn't want to deal with proof of stake and a proof of work and a CeFi and a DeFi. They don't, from our perspective, they don't care. They're not geeks like these two guys. These two guys are really, really smart, right? I don't know if you heard what he said. I didn't understand a single word what this guy said. And I'm sure that he's right. And I'm sure that he's so smart. But our customers will say, look, dude, just like when we type CNN.com, we really don't care. The Akamai servers and the HTTP and the HTTPS and all this stuff, give me freaking CNN.com. So when they come to us and they lend us their coins, they say to us one thing, here are my coins, make sure you keep them, hence this guy, and make sure that when you deploy them, when you lend them out, you'll be able to get them back. And when you give them back to me, give them back to me plus something else, because I'm taking certain risks. You can do it with CeFi. When I lend those coins to an entity, and that entity puts collateral against your coins, right? So if you down here give me these coins and that entity just ran away, I have collateral against those coins, so nothing's gonna happen. In a DeFi, the so-called DeFi, what we do is we basically take those coins and we provide liquidity. Same exact thing, but instead of giving it to a third party, we're giving to a protocol. Do you care how this works? No, you don't. All you're saying is, give it to whoever, but when I come back, I want that money back. And that's what we do. As long as you trust me to do that for you, as long as we do really good work, this system works.
So, John, you're selling it to enterprises, who I would say do care. Obviously, they're regulated enterprises, so it's important that they abide by those regulations. How have you seen the perceptions of your customers change from when you began until now in terms of working with DeFi, accessing the blockchain? What is the change in perception?
Yeah, so I think that there are a few things that have changed, and we started around 4 years ago, and the market back then looks very differently than how it looks like today. It's a much smaller market, both on the business side and also on the consumer side. It was actually right after the crypto bubble of 2017 birth, and then there were two things that were happening back then. One is the businesses that stayed back then were the ones with the more viable business model, because many of the companies that they started doing business around crypto before that were actually businesses that didn't know how to operate in the space, and they didn't have a viable business model. But the other thing is that those companies were very, very early adopters of the concept. So back then, going to a customer like Celsius, that even if Daniel said that he doesn't understand anything of what we were saying, there is a huge amount of people in the company that are very tech savvy on Celsius and in our companies that started back then. And those types of companies knew exactly how to operate in the blockchain space, and it was very easy to work with them. What happened over time is that it's a very good thing is that the early majority started coming in. Basically, the market has changed, and we see it over the last year. There are a lot of traditional players, tech companies, but also more traditional players like banks, hedge funds, traditional exchanges also want to be part of this change. And the market has grown significantly. And I think that one more thing that happened is that the market has become much more sophisticated. If 4 years ago, doing things on the blockchain was basically just transfers. It was I'm entity A, I want to transfer a bit of Bitcoin to entity B, and then there are companies on top of it who do trading, the lending, and so on. Now it's become much more sophisticated. There are a lot of different use cases, payments and DeFi and staking. And I think this is what has changed mostly in the last year, where you see more and more use cases and more players coming in, that some of them don't really know how to operate in the space. And some of them, it's not just on the technical side, it's also on the risk management side, on the regulatory side. And one of the things that we are doing is actually to make it very easy for them to tap into all these new technologies. One on the technical and user experience side, to make sure that even if they don't understand all the glossary around the rollups and DeFi and so on, they are still able to tap into those technologies. Some of them are through us directly, some of them are through partnerships and integrations that we have with other companies. And the other thing is more on the regulatory side, where DeFi is a wild, wild west. For anyone here that has been on DeFi, it was until lately mostly a consumer game. It was around anonymity and around the ability of a 15-year-old guy in the Philippines having the same experience and the same access to financial services as a trading firm in New York. But what happened over time is that the more regulated entities realized that they cannot be on the same market and with the same conditions as anyone else that is doing it anonymously, because then it violates financial regulation. And what we are doing together with other companies in the space is to find this compromise between the wild west of DeFi and financial regulation. One of the concepts is what's called the permission DeFi, where everything is still very decentralized. There is no one owner of the platform. Anyone can access it, but as long as there are KYC. So in a sense, it's like Celsius giving access and giving services to their customers, but in a decentralized way. And this is, I think, how the future of DeFi and blockchain will look like. It will be an hybrid of decentralized and centralized financial services that are KYC, that are more regulated, alongside things that are completely permissionless, anonymous, and anyone can, according to their risk management and according to the regulation they have, they can decide where they want to be in the market, whether they want to be in this extreme of something completely anonymous, or whether they want to use the services in a more permissioned and regulated way.
Thanks. And so Yuri, I think you kind of represent more of the decentralized side of things. A lot of your customers would be mostly or fully decentralized. Daniel talked about Celsius app is effectively, it's like a consumer banking app. You do KYC, the experience is very, very familiar to anybody who's ever signed up for a banking app before. Can you talk a little bit, you mentioned Uniswap before, maybe you want to use that as an example, or some other decentralized exchange as an example. But what does it actually mean to be a decentralized exchange? What is the onboarding experience? What are the advantages, of being a decentralized exchange? Because I guess the point is people who are on decentralized exchanges probably do care a lot more than people who are on centralized exchanges. They just want access to yield. Can you just help to illustrate a little bit what it means to be a decentralized exchange?
Well, first off, I don't think that's a well-defined concept, and it's not well-defined in the industry. I think a lot of people would find themselves arguing with a regulator for many years to come on what that definition is. Let's take Uniswap as an extreme example. Uniswap deployed a smart contract, a program that implements a certain trading logic of alternative AMMs, alternative market makers. And that program cannot be upgraded, which is a very important property from a decentralization perspective, meaning they themselves cannot change this. And now this code runs on 20,000 computers all over the world in an unstoppable fashion, uncensorable. There's no KYC, there's nothing. This is out in the field. So if the SEC would have come to, or FinTech, or any other regulator, come to the folks at Uniswap and say, make this thing stop, they would plausibly say we have no way of doing so. So that's the fully decentralized view of the world. I, as a citizen, find that to be improbable. But there are people in the blockchain, permissionless blockchain space that think that it's the way the world should go. I think the interesting stuff is, in fact, not in this direction. I think the interesting stuff is what we're seeing from what is now over the past few months, people are starting to refer to as Web 2. So all these centralized entities, the real world entities that have thrived and will continue to thrive, they can now start making use of the software stack, including stuff that we're building, to take their business flows, to take their relationships with regulators or customers or business partners, and look at whatever it is that they're doing and say, there is trust here in this particular interaction, there is trust. That trust is required, and in fact, it's getting in the way of business. Okay, this is friction. This is making the interaction less efficient from a capital perspective. And if we could replace this trust relationship with a trustless one, that could improve the market. There are many obvious examples for that. I think the most sort of glaring one is things like front money in exchange. Right? What is front money? It is us trusting the exchange or whoever is sequencing the transactions, sequence them in order, and them effectively and very profitably betraying our trust, pre-ordering transactions, or inserting their own into the stream of transactions to profit from the information that's leaking in our sequence of ones. And so that's one example of a trust that group of traders is placing in the exchange. If we could remove that trust by using software that allows for these things to be trusted, to be done trustlessly, you would have a far more efficient exchange. People would trust it that way.
But that's a really interesting example to dig in, or an idea to dig in a little bit more. And John, I'd like to hand over to you. So obviously, you're working with traditional Web 2 companies. Are you seeing them actually changing their business model or their approach to risk as a result of this? Or are you just seeing them offer additional product lines that customers can access, just like they would a loan or a high yield interest rate or anything like that?
Well, I don't think that the traditional players change the risk perception due to blockchain and DeFi. Eventually, they still want to operate in those this space. under the same risk appetite that they've had before. And our mission and the mission of the other entities and companies on the space is actually to give them access to these new technologies without compromising on security and on regulation, and without needing to convince their risk officers or whoever manages risk on their firm. And I don't think that the perception changes. I think that what really changes is their ability to manage the risk. I think that until lately, what happened is that most of these institutions, especially from the traditional space, haven't been able to manage the risk and understand what the risk is. As soon as they understand what the risk is, they are now able also to mitigate it and say, okay, these are the things that I'm facing when I tap into blockchain, into DeFi, and this is how I'm able to mitigate this risk.
So there's capital risk and there's regulatory risk. Let's talk about the regulatory risk for a moment. Daniel, just picking up on what Yuri was saying around trust versus trustless, would there be a scenario in which Celsius would allow somebody to join by connecting their MetaMask wallet? So you don't do traditional KYC, you connect your MetaMask wallet, and that's all you know about the person.
If I want to stay in business, the answer is no.
And why?
Because as much as we may not like it, regulation is a very important role to play in protecting consumers from bad actors. And if we would like to get all this crypto stuff into billions of people, we're going to have to play nice with regulation. We're going to have to obey by signing rules. Okay, so yes, we're going to have to trade off, to have some trade-off between privacy and the ability to, lend me your coins and tell me who that person is. Now, there was a question going on now for quite some time. If Russia will be able to evade sanctions with crypto, they say, oh, they won't be able to know where the money's coming from. The answer is no. The answer is no, because A, for a lot of reasons. A, the Russian economy is too big. Crypto is still in its diapers. And B, because there are ways for governments to monitor transactions, to monitor these wallets. And I think that if we want to win in the long term, if we would like to serve as a true alternative to typical traditional financial institutions, we will have to take some of that regulatory stuff that we may not like and make them an integral part of our business. So,
and regulatory risk is really dictated by the boundaries that the regulators can put on in any market. Are you guys seeing that change, or these conversations about that being willing to change? And if so, how?
Yeah, so definitely there are a lot of discussions today between the companies in the space, including us and the regulators, on how to change their perception on how to manage the regulatory risk and how to enforce financial regulation. For instance, one of the things that we've seen with the different regulators is that they have seen technologies like DeFi as a threat to financial regulation, whereas actually the same technology, the underlying technology of DeFi is smart contracts, is actually a way for the regulators to enforce financial regulation on traditional markets and on the traditional ecosystem. The regulator needs to eventually trust the different entities, the banks, the other financial institutions to enforce this regulation. Now, what this new technology allows them to do is actually to program this regulation and to assure that they are able to enforce it in a way that is visible to everyone, in a way that is programmable and is much more enforceable than what happens in the traditional space. So I'll take just an example, a DeFi protocol that wants to be regulated. The only thing that they eventually need to do in order to comply with regulation is to extend their code to check who the person or who the entity that accesses the DeFi protocol is, and make sure that they come with a certificate or with some proof that they have been KYC'd and that they have a credit score that is required in order to have the service. And then the regulator can see this code, can see that it's audited and that it's actually enforceable. So in a way, it's much better than what we have on traditional space, in the traditional space and all with older technologies. And this is the kind of discussion that we and other companies are now having with the regulator.
So instead of trusting the company, trust the code.
Exactly.
I want to add. So to add on to Dun's point, it's not only that they can check the code and see what's being enforced, etc. This is all done on a public ledger that is there for all posterity, for all to see. Meaning, even if next year we discover some form of some shenanigans that was conducted, we realize that this is a pattern that indicates, expresses some illegal conduct. We can now go back in time and say, hold on a second, we see that going back to 2015, you've engaged in this pattern of trading and whatnot. This is something you've not been able to do otherwise. So this is a benefit, a clear benefit of the public ledger in terms of consumer safety. So that's one comment. The other is to add to what Daniel said about KYC. With stuff like the technology that we're using called zero knowledge proofs, you can in fact respect consumer privacy and satisfy the regulator in a far more intelligent and careful manner. So you could, for example, settle for proving to a DeFi protocol or to an entity like Celsius. I can prove that I am A, an Israeli citizen, and B, not on some most wanted criminal record registry, etc. Now, if I also want to prove that I'm over 180 in height, I can barely do that, but I can prove that too. And all this can be done in zero knowledge. And you don't need to know that my name is Rick. Right? That's not the actual question that they were asked by the regulator. They wanted to know that they're not serving bad actors. And that I can prove to them.
Okay, I've been told we have time for one more question. So what do you guys, and just as quick as we can, what do you like best about working in this space, about your jobs?
I'll start. So I think that the really very exciting thing about working in this space, and I think that everyone is inspired to agree with me, is the amount of impact and the amount of feeling that you're really part of a revolution that happens maybe once every couple of decades or more. I think that the last time that something so transformational happened in the generally speaking, or in the technology space was around 30 years ago when the internet emerged and web emerged. And I think that now we are really part of this a similar change in its magnitude. And I think that this is really what's exciting about it. I think that the other thing is also the positive impact that it will eventually create over time, where I think that Daniel kind of implicitly touched it, but today, most of the people on Earth are actually unbanked. They are not able to access very basic financial services. And with this technology, and this is something that we've seen with the internet, how it affected media and how it affected and allowed people to eventually access information all over the world. This is what now this new technology and this revolution is doing. A similar thing to financial services, where everyone can eventually equally access anything that they want on the financial ecosystem. And I think this is really exciting for me also, the technological part of it. And as I said, as a geek, it's also very, very exciting and very rewarding to know that you are working on things that are very, very complex. But eventually those things, as I said, are not just technology, it's also the positive impact that they do.
So I guess, when we interview people, I tell them, and this is sort of a marketing professor many years ago, he said, if you can't hide it, feature it. So when I interview people, I tell them, this is like California in 1820, 1830. And there were a lot of things not to like in California in 1820. It was, in many respects, lawless and a bit wild, and it attracted all sorts of characters from all over the place. But there was, I think, I wasn't there, something very exciting in the air. This frontier that's, about to become like the center of the world in many respects. And that feeling, I think, is palpable in the blockchain space, and I like that.
I think the most intellectually stimulating space that there is out there. I mean, there are so things change on a daily basis. It's almost like you do dedicate the time to spend an hour or two a day. It's so hard to learn, to read, to get into the details. You're gonna be left behind. And I think to go back to what Dan said, right on. Right, I mean, we're all kind of looking at this new generation of people that do care about making a living and salaries, but we live in a world that's what we're really after is meaning, is knowing that you are making a very positive impact around the world. And I cannot think, yes, that there are some AI and robotics and all this other cool stuff. I cannot think of another industry that is truly making a huge impact on people on a day-to-day basis. So it's an amazing experience to be part of this huge change that we bring.
Look, that was awesome. I'm feeling energized. Hopefully that helped illustrate a little bit more about this wonderful and strange world of DeFi. If anybody wants to know more about DeFi, get introduced to DeFi, I spend a lot of my time just educating the market, educating customers, teams, regulators. So if you guys want to do a presentation, the offer is open. It's something that we're really focusing on this year. Thank you to the panelists. That was outstanding.
Thank you very much. It's upcoming session and it's just intriguing as hell. So thank you very much to all our panelists. For our next keynote, I'd like to invite Attila Rubitz, Head of Service Delivery from Balances. So here's what we're going to do. We have some content going on, and until lunch will be around 1. Right. Yeah. Okay. So let's take a minute, go back, and I'll let Attila start. Okay. Dear friends, if you want to chat, that's fine. Please either outside or up on the roof. Because hey, we're broadcasting live and we have over 400 people watching live, so we want to continue the content. Please. Sorry, friends. If you want to chat, that's fine. Just outside so we can keep the content. Please. Just start.
Yeah, so good day everyone. My name is Attila Rubitz and I'm representing a company called Balances from Hungary. We are dealing with cybersecurity, of course. We are a very big company and we have a comprehensive API security solution. And today I bring you a $1 million question under FinTech-Aviv for 2022. We will see it after we going through the most critical cybersecurity issues in these days. So let's continue. What is happening today in the cyber space? Actually, Samsung admitted yesterday that its most selling smartphone called Samsung Galaxy, all of its code just leaked. Actually, it's a really good expression about someone's code and it's on the internet. So now every bad guy is working on that finds the weak spot in the source code and how to reverse engineer its security features. On the other hand, based on the JobStack study, most of the internet traffic is now generated via APIs. most, most of the APIs is generated by the banking, finance, and the telecom service providers. So, and according to Gartner, who are an independent IT research institute, 2022 will be the year of the API security because we have to do something with it. And according also with Gartner, insecure APIs will be the mechanism for enterprise network security business. On the other hand, OAPs, who are an open web application security project, they are publishing from 2003, and they have almost every year publishing top 10 lists with vulnerabilities and issues which we should listen to. So they said the authentication is not is a must-have, but the attackers could easily get walked through. And of course, we should focus on enforcement to get full control for APIs and its data. So if you see the changes regarding the OS top 10 previous and the last one, what you can see is we have some new entries, for example, the insecure design, which is a really interesting point because securities have to be a part of the design phase. We have new entries as well, for example, the server-side request forgery, which is a kind of microservice related thing, which means that the microservices is starting to more and more familiar with tools. And but of course, we should focus on the security risk configuration, so configure it properly. Yes. So if you go to the next slide, I really don't want to go deeper this technical part. If you have any question regarding the others, please find me somewhere and have a discussion about. So we could split the top 10 list into 3 categories. One is the operation, for example, the monitoring features. You should extend or monitoring capabilities somehow. Second one,
I'm sorry. Please, ladies and gentlemen, this is we're trying to have a session where we have a lot of content, and if you want to talk, that's fine, but please do it outside or just allow our speaker the courtesy of having able to speak to a crowd. Thank you. So outside or up on the roof. Other than that, please stay here.
Right. So yeah, we have the root causes and we have the symptoms. The symptoms means where the fraud is coming and where your data is leakage, probably due to broken access control and cryptographic failures, and of course the injection, for example, a SQL injection. The root cause means where we put the vulnerabilities into our code is the insecure design, security misconfiguration, and of course the outdated components. We are always working with that. So let me show you an example for insecure design. I think that's enough. Okay, so if you see that the current security practices, then almost everybody's now in that phrase, which is not enough. So we have some encryption, we have some filters, validating data, and monitoring the application whether it is online or not. But this is not enough, unfortunately. So based on our experience, this point could be easily more up to date with, for example, not just use encryption on the client side, but also the side, or even get higher encryption for the connection itself. So if you go to the next slide, we should think beyond this security perspective to add some additional points to the standards. For example, design and development. As we saw that the IT security, security teams should get involved into the design phase to help the developers to find the right resources, to find the security perspectives and go with them. We should use some, we should meet, of course, compliance regulations. We have the last discussion with many of it. So for example, the PSD2, the PCI DSS, the GDPR, the local regulations, we always have to met for that, because if we not, then we are not able to do business on that particular side of the world, for example, or even get some fines because of the regulations. And last but not least, the fraud prevention, which is a kind of new technology and the new part of this API's communication. We should prevent fraud, of course, and why we don't use this technology here at the front of if it reaches the backend services. So that's why we made our self-developed API lifecycle software. This is actually an end-to-end security portfolio with our security gateway, with the fraud management module. We have API management for developers, web application firewall, even KYP and threat intelligence function, which means that you could control your data, whether it could be stay within your country or within your partners or not. Plus, of course, we have service delivery functions. If you see the API security solution, we have the deep packet inspection, which means we are sitting the traffic and analyze all of the part of it, which means that based on the positive security model, we could reach the D49 optimum way, and of course we are understand the SOAP and the REST protocol as well. So we are able to enforce the schema, put on some security and content policies, use the encryption 1.c, and extend the support, extend the monitoring functionalities on the self-developed solutions. Second one is the fraud detection. We are able to detect identity theft, account hijacking, money laundering, phishing attempts, and bot attacks using custom scoring and data enrichment to see whether the API communication is secure or not, valid or not, we should terminate or not based on the scoring. Of course, we could use custom blacklist and whitelist as well based on the customer needs. How it is working in practice? Actually, we use more than 35 social and digital data points based on the behavior, based on machine learning and artificial intelligence, using phone numbers, credit card details, email address. You could see many points in there. Plus, on the network side, we are really good at it. We could use the IP addresses and many customer behaviors as well. What we have for developers, we have an API lifecycle management, which is a design and development toolset. Developers can easily log into it and work in that portal using the custom workflows and help them to work more securely. For the DevOps part, when the operation is coming, we have monitoring, access management, and for example, patch management, and automate everything for them. And just a few words about policies. We are a 20 years old company located in Hungary, Budapest. pioneers in process technology and zero trust. We have more than 500 enterprise installations around the world, especially in the EMEA region. We are always trying to innovate something and do that research and innovation. We have more than 60 developers and more than 30 engineers. Of course, in group-based, and we are the largest competency center for one identity and rest. So I will thank you for your attention. I was Atilovic, maybe, so you could find out with our code prevention module. You could use my email address or find me on LinkedIn. And if you have any question, please feel free to ask somewhere in this event. Thank you.
Thank you very much, everyone. Thank you. And Avil will be with us for the next few days. And they have also the local team here, so it'll be nice for you to see them. So we did this as a hybrid event, and we have many people joining us from remotely. So next, we're gonna have a keynote from Insomnia, and due to the situation in Ukraine, they weren't able to join us, so they will be joining remotely. So Insomnia has an open call for fintechs. Wait, that's me. You don't need this. So here, and hi, Francis. Can you hear us? Wait, can you try again? Let's see. No. Try now. Francis, try now. Okay, for a sec, we have, for some reason, we can't hear you. No, I'm not sure this is gonna work. For a sec, we're gonna try and fix this, and I'll come to you in a sec, in a couple of minutes to see if we can go offline. Okay? I can't hear you. I'll text you. Okay, I'll get back to you soon.
She can't hear you either. What's your mouth?
Okay, so we'll be back with Insomnia later on. Let's get to our next panel. So I'd like to invite here.
Okay, hi again. So We're going to talk about the international fintech landscape, and I think it's interesting to understand that the world became much more global in the past few years. And we saw that it's much easier for companies, for fintech companies, Israeli companies, to penetrate foreign markets without even being there. Everything is done remotely. We actually got used to it in a way. So COVID-19 changed some things, but it's not just that. I think that there are some fintech trends, and I think Tal touched some of them at the beginning here earlier this morning, that were boosted, really boosted, thanks to COVID-19. And we're going to touch some of these areas that really got a great kick thanks to COVID-19 in the last 2 years. And then I'm going to call on stage two other panelists to further discuss. So I think that the best or the most interesting topic that got really a huge boost thanks to COVID-19 situation is challenger banks, digital banking, and other, I would say, alternatives to the institutionals we have out there. And challenger banks are on the rise for a few years now. We saw that, we saw Monzo, we saw N26, and different examples like Revolut and others that are indicated here in this slide. But we can definitely see that when we had no choice other than using digital payments and digital banking features, when we had no choice, so we actually adopted them as end users. So yeah, challenger banks are on the rise, and we see that, and digital payments as well. It's not just the EMV protocol that just got adopted in Israel in the last 18 months or so, even 12 months or so. It's also the tap and pay that is actually in most of Europe and even in Asia and China and different countries is already established for a few years now. We see that it's got boosted as well. All the digital payments and different remote payments that are being done in different protocols. So it's definitely a topic or sub-segment of fintech that got really boosted thanks to the COVID-19 situation. But it's not just that, it's also cyber and biometrics. Nowadays, when you go to a shop, we see definitely also now in different areas of Tel Aviv, different shops, when you can buy with face recognition components. You can purchase different products with paying by using your fingerprint. So we see different components, biometrics components that are enabling payments, enabling transactions, and this is something that COVID-19 boosted as well. Not mentioning cybersecurity. Cybersecurity innovations for all the range. If it's identity theft, identity management, authentication, anti-fraud, etc., and so forth. So we see that cybersecurity got stronger because everything shifted online. So the cyber threats are much more aggressive. So we see that the cyber defense mechanisms are as well smarter these days. Of course, we can't move forward without mentioning the wealth tech and trading platforms that are out there. Robinhood is from the beginning of 2010, from the beginning of the COVID-19 situation, they offered free usage to their end users on their platform. So we see different trades that are being done in this new platform, and we can also trade fractional shares. You don't have to buy the whole share. So there are different features that different platforms adopted and offered to end users to make it easier for all of us to trade in the stock market. So this is definitely a topic that got boosted as well. And InsurTech as well. We can't disregard what happened in the InsurTech space. We see different insurance policies. We see cyber insurance, by the way, to answer cyber threats. We see cyber insurance policies that are offered to companies to answer different cyber threats. And we see, of course, health insurance, different health insurance policies that are offered to basically everyone, to end clients, to make it easier for them to overcome different diseases and challenges, as well as COVID-19 situation. Lending platforms, of course, as well, not just P2P lending, but also the, I would say, traditional institutions that are lending money to end clients, and they are offering all kinds of solutions. We saw that it became a bit difficult for different households to hold the regular cash flow activity. So we see that lending platforms are also on the rise, offering different solutions. And cloud computing, of course, everything shifted to cloud. We had AWS here, and we saw that everything is shifted to cloud. And I would say everything, but the banking activity is definitely starting to understand that if you want to adopt the open innovation way of thinking, and if you want to have to be more open to fintechs and to startups in general, we have to go on cloud. And I want to talk about the last topic here before I'll introduce my panelists is, of course, banking as a service. And banking as a service, and we see that as a major phenomenon, is not just offering banking on the go to everybody on the palm of your hand. It's also offering different services that are basically given to us as embedded finance without us even notice. When we pay for a taxi, when we pay for a rent apartment with Airbnb, or when we pay for in the shop. When we do on-the-go payments, and we don't even notice that, that's embedded finance, and that's part of the future of fintech as we see it nowadays. And it's definitely got boosted thanks to COVID-19 situation. So without further ado, I want to bring on stage Elmar Burma from Investing Holland to join me here, and Harry Clinch from Disruption Banking to further discuss these topics. Guys, join me. Hi. Okay. Yeah. Okay, how are you guys? Everything's okay?
Yes.
Perfect. So, let's start with a short introduction. Thanks for joining me here. And we had some, I would say, overview, a very short overview of what happened. And we're going to talk about the international fintech landscape and what we think is going to happen in the maybe mid-range and long run for fintech in general over the world. So let's start with a short introduction, please. Go ahead.
Yeah, good afternoon. My name is Harry Clinch, and I'm a journalist with Disruption Banking, which is a fintech publication based in London.
Good day to you. My name is Elmar Bauma. I'm with the Netherlands Foreign Investment Agency, based in the Netherlands. I'm coming to you here in Israel. Happy to be here, looking after the fintech sector for our organization and helping companies to establish themselves in the Netherlands. And I was happy to learn this morning that 90% of the companies in Israel, the fintech sector, have global aspirations. And so I guess 90% of you here in this room have global growth aspirations, and we're here to help you consider the Netherlands as an entry point at least into the European market.
Thank you very much. For both of you. And thanks for joining me. And the first question we want to start with is, we talked about the influence and the effect, the impact that COVID-19 had on the international fintech landscape. How do you see that trend moving forward? How do you see the impact of COVID-19, even now when it's almost over? What did we get out of it in terms of the international fintech landscape and go-to-market strategies of fintech companies in the world?
Well, I think it's given a big boost to the digitalization of our whole society, and many groups in society have now become familiar with arranging things online. And I think this has created a much more conducive landscape for fintech in general. So I think the market as a whole has grown tremendously. People have become more familiar with doing things online. But at the same time, I think that it has been, the technologies, they have of course evolved to be bottleneck issues like security and identification. But I think also that, let's say, for real breakthrough innovations, it's really good that we now can actually also physically get together again. Because I think physical meetings between people is where new ideas emerge.
Thanks so much. Definitely interesting.
Well, as Elmar said, obviously COVID massively accelerated digitalization, and that which makes sense. We were forced to stay at home with our lives online, and therefore the technologies offered by fintech found to be even greater use. But I think the interesting that we've noticed in the UK, and I presume the trend probably stretches worldwide, is that we've raised or created a new generation of really financially astute people. Of course, nobody understands how to manage money better than those which don't have much of it, and the financial hardship many experience during COVID, particularly younger people in less secure jobs, has really kind of forced them, I suppose, to take financial matters into their own hands and to search for better, cheaper, more effective solutions. And that's where I think FinTech has really found its place even more so.
Thanks for that, and I fully agree. You know, we sometimes see, we talked about this morning as well, we sometimes see also Israeli fintech companies that are not operating in Israel at all. Even though they are in teams, not saying they're not distributing their products to Israeli clients, they're not even working. So we can indicate some of them. I mean, eToro, for example, it's an outstanding Israeli fintech startup rocking around the world, not working in Israel, not serving Israeli clients. Tifalti, that people from the AWS panel, I think they mentioned Tifalti as well, outstanding company working only with US clients. So, you know, if we talk about, if we try to analyze that, and if we talk about Israeli companies penetrating new markets, and I think, Elmar, that's what you do with the Invest in Holland, you also help different companies to distribute their products in Holland. What do you say will be the best the best way to go for an Israeli startup to distribute this product nowadays in the post-COVID era?
Well, first of all, I think Israel is technology-wise very much ahead in a number of areas in FinTech that are really key. I mentioned already cybersecurity, identification, biometrics. So I think Israel has a lot to offer to our markets in Europe. That's one thing. I think many of these technologies are applicable universally, but they still need partners to really, scale them throughout Europe. And that's something that we can help with, to connect them to the large banks, the large insurance companies, and other financial service providers that can work with it. Because of course there are still differences between markets. And within Europe, it's actually 28 different, or 27, I should say, different national markets, although a lot of regulations are harmonized, and that makes it an interesting market, I think. But the cultural differences between markets are still different. And that's why companies also need to be physically in Europe to understand that. One example, for instance, credit cards are hardly used in our country. We have a very elaborate debit card system in our country. So your system would need to be able to work with that elaborate debit card system that we have in our country. And like that, every national country in Europe still also has its national characteristics of the payment system. So for that, companies really need to be physically in Europe, and that's what we encourage and what we support.
Thanks for that.
Yeah, well, as we all know, Israel is, of course, a massive centre of FinTech, and as you said, particularly in the realms of cybersecurity and that kind of field. I think the real kind of benefit that Israeli FinTech firms can get from particularly cooperation with the UK market is tapping into expertise, which somewhat not behind in, but not quite as strong. So in the case of UK, that probably open banking. And we've seen a lot of cooperation between UK and Israeli firms in that field, because UK is probably the global leader in banking. So like you said, I think that comes down to the cooperation, it comes down to a physical presence in the country, it comes down to working with partners. And we've seen a lot of it, I'm sure that will
Thanks for that. And we're talking about the UK as a fintech hub, Israel as a fintech hub. What can you say about the rest of the world? Which countries are the best fintech hubs you know, and what are their expertise in terms of subsegments of fintech? What's your opinion about it?
Well, you mentioned two very important ones already, Israel and the UK. I think the Netherlands also has interesting players. We have some of the largest payments companies in the world, India and Mali, for instance, were born and raised in the Netherlands and have grown globally. So I think in payments we have a strong ecosystem. But also, let's say, the global networks that we have in trade and finance, I think offer an interesting scaling opportunity for fintech companies. In In addition to that, we have, for instance, the Hague Security Delta. That's an ecosystem very much like FinTech, which was presented this morning very well by the we have a similar physical congregation of companies in the cyber tech era. And I would personally think it would be very interesting for industries to valleys, if you will, of cyber tech.
Definitely. Yeah, I think it's very natural that certain geographies and certain locations will develop expertise and specialities. Yes, that's the same in every market, every industry. And we are seeing new hubs emerge. Miami is emerging as a massive hub for crypto. Singapore is a massive fintech. I suppose I should find a flag for the UK, which, as I said, is a huge open banking centre. Ever since 2018 PSD2 regulation, which made open banking a regulatory requirement for financial firms. Yeah, we've seen huge growth in the space. I think particularly an interesting point to me because of successful cooperation between the public and the private sector. So we had a government committee review, which put forward a number of recommendations for the UK government to consider. We've had a sandbox led by the UK Treasury and considerable amounts of money invested as well. And I think the UK with open banking has demonstrated how governments and public sector can work really effectively with fintech firms in the private sector to achieve really good results. I think that's probably a lesson for any hub looking to achieve some results.
Yeah, I fully agree. We might also add on top of that the insurtech segment. UK is also a great insurtech hub. I would say also Germany with very interesting insurance solutions, as well as the Hong Kong a closer look at take a look at our Asian colleagues. But saying that, we saw different, and I talked about it earlier with my presentation about different subsegments of people that got boosted thanks to the COVID-19 situation. Even the insurance space, when we got user-based insurance, car insurance that you don't pay if you don't drive, basically different solutions that got much more, I would say, sophisticated thanks to the COVID-19 situation. What would you say we should expect next? Which innovations are yet introduced to the general public, but we can see that we are going there? What do you see in your regions?
Well, you mentioned insurance, and it's interesting that just very recently a large American company came to the Netherlands and was able to introduce an insurance for independent drivers, which has been a very growing market segment in the Netherlands. And they were unable to get insurance, and this technology was able now to get them insured. So that's one example of a whole new part of society that's been covered by FinTech. But looking ahead, I think I see a number of important trends, at least, that I think will materialize also in terms of FinTech solutions. Integrations were mentioned already a number of times. I mean, we still have a large number of FinTech companies that are focusing on payments or wealth management or insurance. But I think increasingly people, users want to have all these solutions in one app, and maybe also an AI, an artificial intelligence support system to help them make the best solutions and the best decisions for their money management. So I think integration in general is a very important trend that we're still in the beginning of. The second one, I think, is what I call impact. Consumers, at least in Europe, I think, and certainly in the Netherlands, want to know also what their money is doing to society and to the environment. And so I think the accountability of financial services providers for what they are doing with the money of their clients, I think, will be something that's also very important to be able to demonstrate, not just to claim, but also really to demonstrate what your money has done, for instance, for CO2 reduction or for a better environment or against child labor. And the third one, I think, is an ongoing, well, that's maybe not the right word, but certainly an area of going back and forth between what's, let's say, technologically possible and what's economically or socially desirable. And what I mean with that is, do we not exclude certain parts of the society by the solutions that we're offering? Are certain parts of the society not being, let's say, excluded from credits, for instance, based on let's say their postal code or their ethnicity or their nationality? So I think, and regulators, I think, in Europe are also very keen on this to make sure that FinTech has also a positive economic and society
agree, especially on the ESG remark, when you see environmental, social, and governance in general, different aspects of different, I would say, sustainability reasons that are being pushed and backed by governments. That's great, and impact fintech solutions are becoming much more accessible to everyone.
So it's a similar point to that, actually. I think that one of the big trends we're going to see take on even more importance is financial inclusion. And I think that is one area where FinTech really will add a huge amount of value. There's a lot of work going on with the World Bank and central banks globally to bring more people into the formal financial system. 1.2 billion people were added between 2011 and 2017. I think the updated figures are due soon. But I think we're going to see a huge amount of cooperation between fintech firms, central banks, and international organizations like the World Bank. So onboard billions of more customers in very isolated regions around the world. That would involve biometric companies to help onboard people in new and innovative ways, using new technologies to reach areas that the traditional banks can't or won't. I think we're going to see a lot of advances in terms of payments. And yeah, I think we're just going to see a huge amount of cooperation and innovation going on. And that will help help some of the world's poorest people. So I think that's a really exciting development in FinTech and one that will be hugely important.
Thanks very much. Thanks for that. And we definitely see a trend when fintechs are becoming much less disruptive and want to be much more collaborative with the financial industry. As well, with open banking, open innovation programs, PSD2, etc., we see different financial institutions that want to have more extensive collaborations with fintechs. So we definitely see it is going there. The recognition that fintech helps us and not just harm us, even if there are challenger banks out there that are actually competing the financial inclusion. Before we wrap it up, gentlemen, and thanks very much for your comments so far, maybe we'll take it a step forward to the future of fintech in the way we see it. How do you see in the mid-range and long term the future of fintech? What should we expect?
Well, I think one thing I'd point out is that despite all the progress we've made, there are huge swathes of finance that still remain very archaic, particularly with stock exchanges, and we've done a lot of work on debt capital markets. A lot of the processes remain very bureaucratic, very manual, lots of paperwork involved, in a way that now seems extremely outdated, given the progress we've made. So I think artificial intelligence will have a big role to play in automating a lot of those kind of processes. I think McKinsey actually estimates that AI will generate an additional $1 trillion of revenue and value for FinTech. So I think we're just going to see more of the same. I think we're going to see FinTech revolutionizing and modernizing huge waves of finance that haven't yet fully explored that path. That's good for us.
I agree, and I would maybe add that I see further more an integration of FinTech with other verticals in society, for instance, in the agricultural production chain. I think FinTech is still very much driven by technology and finance, but I think FinTech also needs to bring in the expertise of other sectors to really optimize its work to support, for instance, agricultural production chains. And I mean, choosing the crops, planning of the, let's say, the production, the whole throughput of agricultural produce through the society right up until the end consumer. So I think I see personally a big growth area for FinTech is to really understand the other verticals in society, the dynamics that are important there, the technologies that are important there, in order to really integrate that into those verticals.
Gentlemen, thank you very much. I would like to thank you for joining me today. Harry Lynch and Mabu, thank you very much. It was a pleasure.
Perfect. So from international fintech landscape to corporate innovation. Yes, I was waiting for my picture to show up eventually. So I'd like to invite Zeke. He's a dear friend and global head of markets innovation at JP Morgan. Hi, Zeke. See you.
That's yours. Thank you.
So now I won't be as polite as the rest of the
No politeness.
moderators. I'll be asking you to be quiet. If needed, I'll get up and come up to you. So be aware.
I thought you're not gonna be polite to me. Okay, I don't care about that. No.
No, so I think it's awesome to have you here, and I don't think we had a sit down like this in a
while.
way long. So, welcome. Maybe start by a short introduction about yourself for those of you who don't know you, and we'll take it from there.
So my name is Ziv Gafni. I actually have two hats at JP Morgan Chase. One, and the main focus, 90% of my attention, is I lead the global or globally lead markets innovation. Within that, there's the investment banking innovation as well. It's a global team in Israel, but in other places, New York, etc., where we try to solve problem statements via technology. This can be business technology, tech problem statements, etc. The other mandate is, as I see in Israel, which is not very common for JP Morgan. Anything Israeli related that we can drive throughout this very big firm. We do.
So you have a lot of work surrounding corporate innovation. It's a field I really enjoy. I think it's a phenomenal field that is only starting to go. Now, when we say corporate innovation, it's such a wide term, and everybody takes it in a different manner, especially different tiers of banks, and different end customers or end users who enjoy corporate banking and innovation. So how would you describe corporate innovation? Let's start with that.
Sure. I definitely see why sometimes the term is confusing. First, maybe some evolution. I think the term is pretty new, maybe not more than 10 years being used as corporate innovation, right? But obviously, we all understand what innovation is. It's at the core, the essence of actually humanity, I think, or even nature, to be a little bit philosophical, right? Evolution, etc., etc. But corporate innovation, many years ago, it used to be called corporate strategy. When digital and technology became much more abundant in a way of doing business, then digital strategy came to be. And corporate innovation was sort of the evolution of that. What it basically means, nothing. It means a lot of things to many different people, and they're all right? I would maybe just say that although I have the privilege of leading corporate innovation for a very big organization, one of the maybe best in its field, I would definitely not claim that my team, my organization is the sole organization that does that. It should be a part of the essence of every employee, leader, whether it's in technology, business, operations, wherever they may be. So you can take it in many different directions. First, how do you think differently? How do you come up? I'm trying not to use the word innovation, right? Innovate or whatever. How do you come up with the new ideas? It's especially for an organization like JP Morgan, which according to most metrics, we're number one in most things that we do, whether it's Chase, the biggest American retail bank and business bank, and whether it's JP Morgan, the corporate investment bank, asset management, and the international private bank, etc. It's pretty hard when you are usually number one to disrupt yourself, right? You have much to lose. There's actually a story about JP Morgan around 10 years ago, a little bit more than that maybe, 10 years ago. We were number one in FX. And soon started e-trading. Everybody now knows what e-trading is, but back then it was just an evolving a beginning of something with technology as an enablement. And senior folks actually said, listen, we're number one, we don't need e-trading. After 3 years, we went down to number 10, and it took us hundreds of millions of dollars to get back to number one after several years. So lots of investment and change of mindset. So that's what you do when you're number one, and you can lose by not or by being complacent, right? So innovation is changing mindset. It's changing, the way employees work, is ideate, but many times is changing mindset of you shouldn't build everything, right? We should look to buy. It's not the right thing, right? Shouldn't be the first focus of an organization. Listen, just a few words about the size of JP Morgan. We have more than a quarter of a million employees worldwide. We have more than 52,000 IT personnel alone, right? I think this year it's going to be 54. We have a tech budget of more than $12 billion a year, right? It puts us above Microsoft, for example, which is a pure tech company. Basically, it means we can build everything, but is it the right thing for us to do? Should we really build everything from AI to blockchain to, I don't know, anything, right? Core systems, etc.
But how is an organization that size can start focusing on corporate innovation? Now, where, like in employees, in the engagement with customers, in the engagement with third parties, in suppliers, where do you focus corporate innovation in JP Morgan?
So there are many different folks doing different things. I'm more of a practical, pragmatic type of person. And basically, you know what? I've been doing this crap for 4 years at JP Morgan, but in my previous life as well. Many times it doesn't really work, right? It's a nice word, a euphemism for lots of efforts, where corporate puts and spends time and money and people to try and move the needle. But many times the focus, in my opinion, is not put in the right place. What do I mean by that? At the basis of trying to create new products, new lines of business, new whatever, it has to do with the way a corporate works in terms of budget allocation, prioritization, people allocation, projects, etc. Now, let's focus on one certain type of innovation, which is generally called as scouting or fintech, right? When you want to work with great, talented, whatever startups worldwide that can really create something for you as an organization and in the time to market, really try to move the needle. You end up, working with the senior leader of that organization, and he has budget constraints, he has people constraints. So if you come up with the most amazing startup list and knock on the door, this could solve the world hunger. Sorry, world hunger is not my priority now. This would be maybe for 2023. All right, maybe it is the priority, but sorry, I've already allocated my, 2,000 employees to work on XYZ. So there are really big problems in terms of the process, how you can actually inject innovation or external innovation in this case to a corporate in a timely manner.
Can you give us a more practical example, like a process that you do?
Well, first, that's a problem. Because of that, I built a whole new, after doing it the first 2 years, by the way, JP Morgan has a tech center in Israel, very successful one, building many cool capabilities and features for core systems, much of it for the corporate investment bank and the markets business.
Now, like an example of maybe a process that you underwent or something that maybe you sprouted in Israel, it will be nice to see.
Yeah. So before that, in order to tackle those problems that I mentioned, I built a framework, all right, that tries to eliminate many of these inherent problems. First, alignment to the business. So, as I said, I work in markets, right, and investment banking. Before that, I was a very general team, digital innovation for the corporate investment bank. So now I'm aligned to a specific line of business. I sit in the leadership of that specific line of business. And my peers, right, the very senior leaders that run specific businesses, let's say equities, let's say macro, let's say whatever it is, I hear their needs on a daily or let's say weekly basis, right? That's first. Second, I took a substantial budget and as I know the strategies and priorities, I tell them, listen, here's an amazing startup, or let me understand your problem statements, let us search for the amazing startup, or we can build, I have teams of engineers and management consulting people and product people. So it's a multidisciplinary type of framework. And they all join forces together to solve those problem statements. And what we do, it's not just, suggest an idea, because we said there is a misalignment in time, budget, people, etc. We actually take all the processes of bringing in that technology, assessing it technically, right? Having a full-blown POC with a full-blown KPIs from that business. So what eventually happens, we bring it to a decision, go, no go, but it's like almost a no-brainer decision, right? Everything is
How much time is this?
It's a very long process, of course. I mean, it depends. Sometimes you actually have solutions already in the firm. It's a very, very big firm. So any potential different teams already built something. But sometimes it can take a year until you actually have it in production working. And we as a paying customer, obviously, we also invest in companies, etc. More of a strategic investor, but yeah. So an example.
Yeah, please. Yeah.
Finally. Well, there are many. Maybe for this audience, something more on the tech for business problem statement. As they said, we do a lot of tech for tech. It's a very big organization, technical organization. Cloud migration, modernization, engineering excellence. These are a few of our priorities as well, not just the tech for business ones. But maybe an example of a walk-in, again, to address this crowd, a walk-in startup. I actually don't remember who introduced them to me.
It'll be me eventually.
The place in heaven is secured. With data science and AI, right, in algo trading or modeling for markets, QR, if you are familiar with the term. This data science is prevailing. When we have 1,000 data scientists working on the greatest platforms already there. So modeling actually becomes nowadays as a commodity. All right, using the best and most modern types of data science is already a commodity. What's not a commodity is the type of data that you use. So we as a firm obviously have some access for a premium board, source, internal data, whatever, right? All of the above, but limited, right? So if you can introduce alternative data that can actually enrich your model and improve it, no matter what your target model is, right? I don't know, to increase accuracy of a trajectory of some commodity, making this up, that's awesome because it actually creates lots of dollar value. Lots means millions and millions, if not hundreds of. So with that walk-in, that's exactly what they do. Obviously, I won't share the name. After a POC with the QR team in securities products group, very hard actual use case. We're able to prove out that it works, and we're in contracting phase, which will end in a couple of weeks.
I know for a fact you have several companies in the pipeline that you're actively working with, and that it's always nice to hear that you're working with Israel startups. But really, for the maybe a couple of minutes we have left, and it's really important to understand how to approach JP Morgan and who should approach. What are you looking for? So help us.
Yeah, it's a great question, and unfortunately, there's no single answer because honestly, it depends really on the type of solution for the type of business, right? As I said, JP Morgan is a very big financial services firm. It does almost everything besides the insurance, I think. And when we try to move the needle, we try to move cheese. We work with people, And some people, some senior leaders are susceptible for external innovation. Some are less, some are more prone to building everything. And that's the nature of the world, obviously. People like me trying to change that, but still a very big firm. So first and foremost, identify the stakeholder, right? Many of the solutions would potentially have different stakeholders, right? A solution, for example, like the one I mentioned, could be deployed, integrated in almost all of JP Morgan's different lines of businesses with many different customers that will sign the contract, right? Not just markets and investment banking is one. We're actually working now to scale it throughout the firm with additional use cases. It could be endless. So that's first and foremost. Don't give up if one person said no. More importantly, I would say, some are reluctant to work with very early stage startups. You have to identify the champion that will be willing to put the time and effort, because many times it is time and effort. You're not Microsoft. Nobody, it used to be IBM. I hate saying it. No CIO will be, will lose his job by choosing IBM. So, but anyway, you really have to understand that a firm like us, we put a lot of effort to secure data. Data is the most important asset that we have, right? That's a trust. We said trust. Now, we will not put data in a small startup that doesn't have the proper measurements, security, cyber compliance measurements that will uphold those high standards. So many times we want to collaborate with amazing, products, whatever, but as a company, they are still not ready to work with companies like us. So then we end up working with them, actually going through those phases of actually becoming an enterprise or corporate by themselves, right? There's a very big difference between a startup that is early stage and sells to small enterprises, even financial services, but second and third year banks to a first year bank. It's really different. The types of, processes and journeys that we ask startups to undergo is substantial, but then they end up becoming something that they, light years ahead before they actually went on this.
So that's great, because you're not only implementing, you're actually working with them in time and trying to understand where the use case fits both your clients and users, employees, etc. And it's not something you see every day with the integration departments in other firms, in other financial institutions, regardless of tiers. So great. Any final note that you want to add before we wrap up?
I think we live in exciting times, really. I think first, Israel as a bedrock of innovation of amazing startups. I started saying, right, there was a tech center in Israel. The JP Morgan started around 8 years ago with amazing talented engineers. But then senior folks in the firm realized that there's the ecosystem, that there are amazing ideas. The spirit of innovation is abundant here. So decided to invest and create that innovation practice, as I mentioned before, something more ecosystem related and driving throughout the firm. And now a little bit more business driven, impact driven. One last note, you know what? As I said, I'm a very pragmatic person. At the basis of this framework, I'm actually measured upon dollar impact, which is very not usual to other innovation teams. Usually it's around POCs, sometimes investments, whatever. Dollar impact. If you can identify a team which wants to collaborate and is measured upon that, that's probably the place to go.
That's unique. The dollar impact. Okay, thank you very much, Ziv. It's been a pleasure to host you again.
Thank you.
Okay, we're gonna have in a couple of minutes we're gonna have some food and drinks and have a break a little bit. But before that, I want to try and have our friends from Insomnia join us. So we'll try one more time. Let's see. No, okay. 1 second. Okay, meanwhile, I'm gonna tell you what we're gonna have next. So after Insomnia, we're gonna have a break, 30, 40 minutes. So we'll have some food, some drinks, and freshen up, stretch our legs. I know I need to. Then at 1:45, we'll be back for some more panels and keynotes until around 4. We have a really cool session with fries and beers for working with the NFIA of the Dutch industry. Okay. Hi, Francesc.
Hey, Dan, how are you?
Okay, perfect. We can hear you, so it's great now.
Okay, it's okay.
Yeah, everybody hear you and see you.
Yeah.
So I was telling the audience here about the innovation hall and what Insomnia is doing, but I figured out
I can't hear you well. It's person.
Okay, so please take it away. We see you. So maybe introduce yourself and Insomnia.
Okay, I can introduce myself on Insomnia, and then I'm going to share a presentation.
Sure.
Okay.
Okay, you can share your screen.
I can share the screen? Okay.
Yep.
Just more please.
Okay, we can see your screen.
Okay, can you see it?
Yeah, perfect.
Okay.
Okay, go ahead, Francesc.
Okay. Are you going to tell me when it's okay?
I'm sorry, we can hear you.
Are you going to present me, or I need to present myself?
Oh, we already did this. Yes, of course. So we're now. Let me just give you that. We're live now, broadcasting live on our website and also to our audience here in the room. So they all see you, although you can't see them, but maybe you can do this. So I'd like for you to start and introduce yourself and Insomnia.
Okay, I can do this myself. There's no problem. So are you going to tell me what time, what is the moment to start?
We are live now, Francesc. Hi, Francesc.
Okay.
How are you? Good to see you. Welcome to FinTech-Aviv Annual Summit. It's good to have you. If you can share some information about the disruptive open call that you're working on.
Okay, so thank you so much, now. Let me show you what we're going to launch in this FinTech-Aviv Annual Summit. Thank you so much, Tal, and all Tel Aviv FinTech and digital ecosystem. Thank you to Ralph, thank you for your support and your time. Let me show what is Insomnia, what are we doing in Spain and around the world, and what are we going to launch in this event, because for us, Israel and Tel Aviv is one of the key poles of entrepreneurship and FinTech and digital technologies adoption for the world. That's from the response and Insomnia General Manager, and I'm going to show you some developed steps we are going to take in the next few months. So we announced we are going to launch in 7 July this year a big open call, a disruptive global open call, and we want to leave with you the greatest transformation of the global FinTech and digital tech ecosystem. And we like to do it together too, with the corporates, scale-ups, FinTech, financial, insurance companies, technological companies, and all the stakeholders involved in this kind of sector. So let me show what is Insomnia. We are building open innovation ecosystems from 5 years ago, matching corporates and global startups that makes us an international open innovation hub specialized in cooperation leaders in FinTech and digital. And now we want to launch this with the global code for startups and build the largest FinTech and digital ecosystem together with you. We have a model, we have a framework. We are B2B, we perform a digitalized corporation, promoting B2B models with the best startups and the best ecosystems of the startups and scale-ups and corporates. We don't take equity from the startups, so we don't invest in the startups. So we are transparent, independent, and objectives in our open calls and evaluating and selecting the startups. Non-stop scouting. We are continuously searching, proactive, and pre-screening the startups on the working events and all kind of channels. And to create some of the scope and our goal, principal goal, to create in the startups and the corporates. So we are transparent, independent, and not abuse, bringing to the corporates the best time of the world, independent of the rate of maturity of the startup. We are not into the commodity and providing government legal and discipline solutions. So we are based in Spain, but we are very international, connecting with the best talent through the talent group, networking, independent network for FinTech and digital, with connecting with 20 ecosystems like Israel, North of Europe, Latin, or Asia. Let me show what is our vision of FinTech and digital in the next years. Big techs are increasing, and we do think that the FinTech and digital could no longer surprise you. There is still much to do. The government agency estimates that in the metaverse in 2024, there will be transactions worth 800,000 million euros, and according to the consulting firm Federal University, in 2030, there will be more than 1,000 million users in the metaverse. So it's changing all the paradigm of our FinTech and digital, and we have to be prepared to this kind of change. So new challenges, fast changes on markets, new consumers behaviors and preference, and new competitors. What are the trends in the future models of FinTech and digital? Financial metaverse, distributed ledger for technologies, cross-sectional finance and insurance, DeFi, digital assets, digital wallets, and NFTs. Is the time to change? Is the time for change has come? So where is FinTech and digital going? All the people, all the stakeholders, all the corporate startups are going to connect and work in a cross-innovation model. So we'd like to discover it together with you. So the largest global FinTech and digital call will be in 2022. In 7 July, we are launching it. And we like to connect 20 countries, connecting Latin, Spain, all Europe, North of Europe, Israel, Asia, Pacific, connecting with more than 10 big corporates, financial, banks, insurance companies, governments, technology and payments. And we'd like to develop more than 5 15 pilot projects and MVP, with a pool of fintech and digital partners within the largest ecosystem in Europe. To join launch the challenges that combine finance, insurance, and technology. I would like to launch also a big open call and a big global demo day in Madrid called 100 Startups. It will be in November this year with the EU support. So you're invited to join us, you're invited to participate in this kind of event and this kind of big open call. And I think Israel can be the first step in this way. We like to build it together. So you're invited to join us in the webinar on March 29. You can select this QR to join us to this webinar. It will be the first step to explain you with our CEO and our project managers in FinTech and Digital that we want to leave with you the latest information of the global FinTech and Digital ecosystem and paradigm. So we like to join us. We like to build all these things with your corporation, your scale up, your startups, your hubs, your ecosystem. And Insomnia is an ecosystem builder, like you know, and we have our model. 4 years ago, we launched in Israel our first open insurance hub in a pool of 5 insurance companies, and it was an exit. So we like to do it also this time in Israel because we consider Israel a key pole to develop the project. So thank you so much for the time. Thank you so much for the support. So very invited to participate with us with a big step and the first step in a big way. So thank you so much.
So, Francis, I'm going to add a little, because for those who haven't experienced working with Insomnia, we talked a lot about corporate innovation today, and what you're doing is phenomenal. The way you orchestrate the relationship between different markets and allow opportunities from different markets to different markets is remarkable, and I hope that the corporations and fintechs will seize this opportunity. Of course, you can always connect to us, or of course, join the webinar and we'll connect you for a second, the team at the Insomnia. So thank you very much, Francesc. We'll take it from here and send you our regards from Tel Aviv. Stay safe and hope to see you soon in Israel.
Thank you so much.
Bye bye. Okay, so we're at that point in time where we can go stretch our legs, have some meats, have some good drinks, and we'll be back at 1:45 sharp. We have some additional content for you. So we'll see you back here for our next panel, which is embedded finance, where we host a Wire, JPD, a UniPass, and Juice Banking from you will be joining us now. So enjoy and see you back in a couple minutes. You like to see for the next session, we want to continue. We have a bunch of other content. We have some panels, we have fireside chats, we have keynotes. So let help me get you back in your seats. And in order to do that, I'm going to invite our panelists for the next session, which is going to focus on embedded finance, as you can see here. So okay, so we're going to start with Guy. Hi, Guy. Yeah, of course, you're not going to be alone. So Guy Kashan is the CEO, co-founder at Rewire. We have with us David Dungey, who's the co-founder and CEO of Unipass, and also Nafal Segal, Nafal is the GM from Jupiter, and Moshe is joining us from New Jersey, just landed this morning from Juice Bank. Okay, so please, ladies and gentlemen, let's begin our session. We have another. Okay, you have another mic, and of course we will be starting. Okay, so what you're going to do is you're going to power through this. You don't understand. Does this work?
I don't know.
Yeah. Okay. Perfect. So let's start by introducing yourselves and the great companies you come from, and we'll dive into embedded finance in our discussion.
Sure. Thank you so much. My name is Nafal Segal. I'm the general manager of point of sale financing at Jupiter. So what it means is that we provide to the larger banks, larger issuers, and merchants a buy now pay later solution for them to very quickly deploy buy now pay later.
Thank you. Hi, everyone. My name is Guy Kashtan. I'm the co-founder and CEO of Rewire. We provide financial services for migrant workers in Israel, Europe, and UK, from money transfer to insurance, credit, and anything else that they require throughout their migration.
We'll use this one, and you'll use that one.
Okay. Hi, my name is Moshe Golan. I'm the founder and CEO of Juice Banking. Juice Banking is a banking service platform for SMEs. We help businesses implement fintech solutions into their work stream, whether it's helping their employees help with a better retention or customer satisfaction or improve their efficiency.
Hi, I'm David Dungey. I'm the CEO co-founder of Unipass. It's my third company. I was previously the CEO and owner of SafeShop, which was sold in 2019. Unipass is helping a B2B digital platform to be the owner of the payment experience, to control the funds flow and do monetization for payments. We are operating in the UK market for now and regulated by NFC.
So we're going to start with, we're going to kick it off with how do you see embedded finance in generally 2021? And what do you see as the impact of embedded finance on the financial services? You know, you're all in the retail space, you're all approaching it, clients, and it'll be interesting to hear how you foster embedded finance in your operations. Whoever is holding the mic or moving.
Okay. So 2021 is, everybody knows, we're kind of a COVID year. So we've seen acceleration in embedded financing into more businesses. I think from a fintech perspective, we've seen a simple no-code, low-code solutions that introduce, I would say, single APIs that will help people implement more solutions into different businesses. So digitalization is the kind of trend. It became easier in 2021. I think COVID just accelerated everything.
Thank you. And by the way, I want to provide a service to the audience and explain what is embedded financing. Sometimes I find that the coin terms that we kind of like know because it's our day today is something
great initiative.
Yeah. So embedded financing, correct me if I'm wrong, is where you find financial services outside of the home banking app. Like if you go to your Bank of Poland or JP Morgan Chase, and this is where you expect to find loans, deposits, remittances, etc. Embedded financing is where it's just elsewhere. Maybe it's in your commerce experience or just different places that we don't expect to see. In terms of, so at the end, embedded financing is a growth channel because it does allow the classic product, whether those are loans or payments, to be made from a third-party app, whether this is a native app or any website or any store location or just a bit more location. So as a buy now, pay later solution, of course, we are, an embedded financing in essence. So naturally, this trend of adoption where people can very easily apply for the new credit facility from whether mid-purchase or after they made the purchase in various way, finance their transaction is I think a very strong use case of embedded financing exactly. So we've seen it to be very, very grow in 2021, of course, with COVID and the need for these sort of solutions, and also adopted by the larger banks. I think most recent Santander announced that they're going to market with buy now pay later, so that's another stamp of a large incumbent bank going into embedded financing point of sale in the point of sale. So definitely it is a very strong trajectory.
Yeah, sorry, take that.
Oh, thank you. For me, it's the year where banking as a service or financial services as a service became significantly more popular. It's not that it did not exist before. Companies that we talked about before, like Wirecard and others, existed even before 21. But in 21, multiple unicorns were created around that area, which allows many other companies to bring finance into their services, whether they are a financial company or not. I give you a few examples. For us, we launched in the last year, we launched both the first insurance offering under our platform and the first credit offering. This is something that 10 years ago would probably take 10 times more people, 10 times more time and money to do. And because now services are available, you take them, tailor them to your audience and to your platform and provide them and make them accessible to customers who, in many cases, like migrant workers, wouldn't have access to those services in other cases. Just one last example, we are launching soon our service within 200,000 cash deposit points across Europe, which again, when we did that in Israel 5-6 years ago, we did it with 1,000 points, including Superfarm and other locations. That took us a few years to build, including regulatory approvals, etc. Now, it took 6 months, but still within one large partnership, we can reach 200,000 cash deposit points, which a few years ago would not have been possible.
Huge change, huge, and I love the fact that you're doing bundling. I think this is something that we talked in the previous annual summit, that bundling will be something that will be a focus for many fintechs, because with embedded finance, with open banking, they can bundle and foster different value proposition for their end customers, and customers would like to have, well, as much as possible from one endpoint, from one a type of, from one supplier, provider. Yeah. So
yes, as they said here, my colleagues here, embedded finance is not something new. It's just, like a buzzword of the last 2 or 3 years. We were doing embedded finance for years, but in the last 2 years, there is a new way of thinking companies that will manage to integrate more easily with the banking system and offer it in a simple API or in a simple UI, UX, to the customers doing their payments and financial services. But the terms of embedded finance is really about non-financial companies that offering now payment and financial services in the right time, in the right context. So it's a market. Now you can see that all the venture capitals and the big research firms estimate that this market is going to be $7.2 trillion by 2030, with $140 billion in revenues by 2025. We did a lot of work on the research. And embedded finance, the wider road is 60% of it is payment. There is lending as a service. Obviously, there is banking as a service, and also insurance as a service. So, when you are entering to Uber cab, for example, you're getting a service from Uber, but behind you have so many companies that involve. You have merchant acquirers, you have issuers, you have KYC, KYP.
but Uber is simply offering you very easy way to pay.
But that relates exactly to what I said, the idea that even if embedded finance was here for several years, now we see companies utilize it and moving much faster to the market, moving much faster to their end customers and providing well, much more services. So this is what I want to focus. And one of the major catalysts for 2022 is impact. It's something that everybody talks about, whether it's investments and a lot of investors want to see how their investment is being doing impact on the end customers or their operation of the companies that they're investing. Consumers want to see how well if I'm in engagement with a fintech or with a company, how does that impact for the greater good? And I want to start with Guy because you're doing a lot of work on that front, right?
Definitely, I'll say the reason why we founded Rewire is to help migrant workers send money home in ways that's concerned, efficient, cost efficient. When we launched our services 6 years ago, the average cost in Israel at the time we launched it before spending in Europe was about 6% of the money that they send home. So 6% of what they make is going away in fees and foreign exchange. We launched our service to 2.5% and that kept reducing. And today the average in the Israeli market is between 2 and 3%. So that's already a significant impact on migrants that, just to remind you, in many cases have left their families back home in order to create a better and more financial secure future for them. So this is where we started. The more we serve migrants, the more we understood that their needs are holistically defined. It's not just the money transfer. Money transfer is why they migrate. This is the most important thing they have. But it is also the first time that they will have a saving account, first time they credit, first mortgage they will ever take after a few years of migration. And for us, we adopted the concept of a double bottom line, which on one hand means we are of course measured for future profit. We are a for-profit company. This is invested in us. We are not an NGO. On the other hand, we also measure ourselves on the impact and how good we are for the greater cause and our customers. And we believe this is also where business success will come from with our customers. It's different than the many big companies who also do impact by donating and otherwise. For us, it's within everything we do. We consider a new service, we consider what is the impact on the customers and the lives, on the countries where they come from. This is a part of how we follow our business as well. And more importantly, it's part of how we see our success.
And I think, Moshe, you can also relate that in your activities. When you work with SMBs, with small enterprises, provide access to capital for their clients or employees.
Yes, so we've been in business for 20 years, so we've been doing impact more than 10 years now. Some of the things we are focused on underserved markets. So we go all the way from servicing people in the point of sale, the check cashers in the United States, converted them, giving them a digital bank. This is started 10, 15 years ago. And then going into more extreme situation where we give to, we have the largest prison release program in the United States. So when an inmate is released, he gets basically a digital bank right there. So he gets a MasterCard bank account in states of California, Florida, and other states. So the impact is, you can see, you give them money, they can then be empower them to get direct deposits, to get federal benefit. We've done federal benefit and streamlining 13, 20, 12 years ago, where the people get 4 days the money early, 4 days earlier. And we do payroll 2 days earlier. So those type of things are extremely important for the underserved. And we really committed to overserve them because they don't have any options. If you think about it, an American Express customer has multiple cards and has the ability to actually get great services. And usually the underserved were underserved by the banks. They're usually the ones who need a good service. They need a good fee structure and inconvenience. So we don't have, that's something that we are really focused on.
For those who are not familiar, in the US, you have a credit score system. So if you don't have a good credit or not at all, it's almost impossible to work and live in the US without any credit. And a lot of companies are trying to provide access to some financing, like you do with the program. So that's definitely an impact, especially for foreigners coming to the US from all places around the world who need to work and live in the US but can't because not even in Costco they can get a credit. So that's tremendous. David, no problem.
And we all giving the aspect of the UK market. This is a matter of where we operate. In the UK market, you know, the lifeblood of the economy is the SMEs. These are typically very small businesses between 1 to 5 employees with yearly turnover of £100,000 a year. And they need the systems. They need the systems to use to operate on the day-to-day. For example, they have systems to issue invoices. They have systems to do payroll, to issue cards. And our example, you know, from the customer that we serve now in the UK is to go to this digital platform and tell them, why don't you monetize some payments? Why don't you offer payments and financial services integrated with your SaaS solution? And the SMEs, essentially, you are helping them with the cash flow optimization. Because in the UK, you can pay with open banking. It's like really instant bank transfer to your bank account. And the number one problem of SMEs, as you know, is the cash flow. It's a cash flow issue. So this is one of the pain points that we are trying to assist. And the way that we structure it is that by offering embedded finance to this digital platform, we're basically giving much more services that are critical to the SMEs to optimize the cash flow.
By the way, why UK? Was it because of the infrastructure or the business opportunity?
My advice about UK, I'm a big fan of the UK because I'm 6 years CEO of a public company in the UK, so I know very well the market. But the UK is a heavily regulated market with very fintech friendly, with APIs, all the banks supporting open banking. It's a market of debit cards. So really good, and there is no so much potential, let's say, in this market with alternative payment solution and all kind of cash, etc., or checks. It's really a good market. It's a big market. It's not like a Israel market. So that's what started in the UK.
I feel like you have something to add.
No, I think everything that was raised here is a great example. I do agree that this is a very market specific. I don't hear impact financing being so crucial for European markets. But for the United States and Mexico, we just launched in Mexico and Argentina. These are the hot topics, of course. So the way that we cater to inclusion is to have multiple, because then you have the prime bank who only wants to get the best customers, and then you have alternative lenders, and you have different underwriters. And well, good for them. They don't want the good borrowers. They only want the ones that the banks will consider to be non-eligible. So this is how we cater, because we do the waterfall and we provide many under one roof to the merchant. I really like your answer, just because of the SMB, which is another angle that I didn't think about. Indeed, the problem of the long tail is as much as painful to the merchant side or business side as it is to the consumers. Because, for example, larger banks will not, it's not just about the borrowers, they will not agree to take small merchants as merchant to their program because of the merchant risk. Maybe they'll go bankrupt, maybe they will, send default goods. And indeed, this is a very important problem to solve. I would say even more burning, or will have bigger impact on results than solving the customer eligibility. So I think
if I may, one more impact. We serve more than 600 small businesses, small medium-sized businesses, especially in the, I would say, low-level service businesses. And there, the focus is, especially in the last 24 months, is instant payment and earned wage advance. So employees want to get paid in the end of every shift, every day, not once a month or once every 2 weeks. If you think about it, in Israel, you pay every 30 days. And the employer basically sits on your money. So in the US, it's going to daily payment or instant payment.
So you're all focusing or providing some sort of accessibility and elasticity to your end customers. And it sounds like you're each working in various markets. Maybe you can share some more examples of how do you provide this elasticity, and how do you provide more access to your clients. Not only it can be to new products, it can be to new features in the product or in new markets, however you see this.
So I will give you a nice use case in the UK. Obviously, the COVID accelerated a lot of
lot of offline businesses to digitize it to marketplaces, online marketplaces. So think about on-demand grocery, like what, but for grocery. So think about application that is now as it has 100,000 drivers only in the UK. And the consumer is now need to buy on-demand grocery. And the application needs to detect the driver next to his house and find the Sainsbury or Tesco or the grocery store is collecting the products and needs to deliver everything in less than 1 hour, 35 minutes. But the driver is basically taking money out of his pocket to buy this product. And what he needs instant payment. So in the UK, for example, we support payouts in less than 10 minutes, faster payment. So we assisting the drivers, and we're assisting the platform, and we're assisting the user, consumer basically, because we accelerate everything with instant payout.
It's beautiful, you're reducing the friction to minimum.
Yeah.
Okay, another one?
Yeah, sure. So our service is rendered mostly to banks. So when we think about LCCs, how can we make the product more agile for the banks? And this is a cool exercise that I always do because we speak to many banks in different parts of Europe, in the US, South America, Canada. I always ask them, well, look, we're here today because you want to have a buy now, pay later. What is buy now, pay later for you? And trust me, every bank, every country is a different answer. Sometimes they think about it like a short-term loan, which is, it's really a loan, but it's like, it has no interest, so it's a buy now, pay later. Or sometimes they think about it like a revolving line, but it doesn't have a card, so maybe you access it through other means. Sometimes it's more of a split it, one of our countries' big export companies. So yeah, they're doing very well. So that's sort of like a mechanism or deferred invoice, and they each have a different notion. And in Mexico, for example, it's completely reversed than what it is in Europe. So buy now, pay later is really the thing that I don't have. Like I have a classic product, the buy now, pay later will be the things that I still don't have and other markets do. So this is the way we're agile. We have all the building blocks and we're able to provide to them buy now, pay later, which in every country means the things that other countries have and they don't get that. I think it's quite elastic.
Maybe because, sorry.
So everybody can hear. So we don't, sadly, there's not enough time to go through everything, and we have limited time, but I do want to get from you maybe 2 cents on what do you see as the future of FinTech in your designated segments? And what do you see are the milestones for 2022? What do you think people should look into, maybe entrepreneurs should dive into? Or do you feel that the financial institutions or your end clients are looking into? So really, from your aspect, what do you see is the next big thing for 2022?
I'll touch 2 things. First, embedded finance, and then our industry specifically. I think that embedded finance is a very technical term. When I hear it, maybe because I studied computer science as well, but embedded is like something within a system. And I imagine like something that's not finance with a small financial aspect within it. And for me, that's not the real direction of finance. For me, it's more fintech or finance everywhere, where whatever we do with any financial aspect of that would be included within in a frictionless manner, where we don't really feel that now we're in this embedded finance arena. One example for that is when you buy a ticket and buy tickets, but also taking insurance as part of that. You don't feel like you move to a different website of an insurer and buy insurance. This is actually what is happening in that case. So I think more experiences would be frictionless like that, without you really feeling that you move now to a financial experience like happens today in many cases. I think for our industry, which is payments, banking, financial services for migrants in general, I think the trend is also where banking has started, and that's vertical banking, because financial services is becoming more available now through embedded finance as well. Then I believe different companies will take in a way a niche that could be very large, like 200 million migrant workers around the world, and provide them with all of the financial services that they need. So this is taking away financial activities from banks or from companies that are built for specific one service like money transfer with Western Union. And you'll see customers getting all of the services they need, especially around finance, from specific institutions with that specific target in mind. This is our strategy as well. And this is also what I believe other companies, even on this panel, will be having with their customer business.
Yes, so I'll probably repeat myself, but as we see now, I've seen this happening. Embedded finance becomes more integrated part of any business. It becomes easier to embed any financial solution in any application. We've seen this in the past. It took a year to launch anything, and today it's really fast. Sometimes it's real time. So we will continue to focus on. We have a quick start solution for SMEs that is no code whatsoever, where you can issue all kinds of financial products like disbursement card, EWA, etc. And you can go to what we call blends, which is pre-existing use cases that you can just take in a limited API and use it. So whether it's disbursement virtual cards or buy now, pay later or whatever. And then we have a whole host of APIs that you can come in and basically do whatever you want to do. So that's kind of automation of and removing friction from embedded finance.
Is essentially every company will be a fintech company. In the sense that every company we need to offer payments and financial services, and we want to embed it within the product offering and also redirect the customers to third parties. Open banking is another trend which we clearly see is becoming more popular. Again, especially in the UK, but it will be in Israel, it will be in the US, and it will be globally. So cards popularity will remain, but open banking will catch it simply because it will be cheaper, it will be faster, with less parties involved in the value chain. So when we're in a good spot, I believe that companies understand that they need to focus on the core business and not start to develop payments and financial services, because we are talking and saying that it's easy because we are the enabler of the finance and payment, but it's super complicated, it's heavily regulated, and it's difficult. But that's the companies that this new wave of fintech companies will be the winners, I believe, in the next decade.
Okay. Yeah, final.
Yeah, I think also drawing from the other panelists is the topic of regulation, which is, well, financial services and insurance is not the same as any other product in the world that you can think of. Because if I manufacture chairs, I can sell as many chairs that I manufacture as long as the price works and it's a good quality. Whereas financial services are regulated, and not only that, they have to have underwriting, anti-money laundering, KYC. So underwriting means eligibility in terms of the risk. Risk and compliance, not the same thing. Sometimes people mix it. So in financial services, growth is capped. And it is not a matter of price. It is not a matter of product. It is a matter of risk and compliance. Therefore, I find that it's very easy for a company to have a great idea. And many fintechs is a bundling of a couple of third parties and white label them. There you go, it's packaged. It's a packaged bundle. Now I have a product. To go from 0 to 1 is very easy. To go from 1 to 10 is more hard. And when the reg tech industry is more, when we commoditize and democratize the ability to be regulated and to be governed and to have easier streamlined KYC, KYB, charter, underwriting, that sort of thing, this is where fintechs can really grow. And that's why, by the way, I think for fintechs, it's easier to go horizontal than it is to go vertical. Because always you're capped by, oh, you need to put down like a few millions of euros to get this license. So, okay, I'll do my use case in another country. I'll find another use case does not require me. So like the growth is kind of like jumping more horizontally than it is vertically. So for me, I think the big catalyst is the democratization of regulation and governance.
Beautiful. I love the various insights you have here. So I want to thank you very much for joining us today, David, Moshe, Mafal, Guy. Thank you very much. It's been insightful, and I hope to have you next year to see if our projections are true. Thank you.
Thank you.
And from the Embedded Finance panel, started our day with Sydney from. We started our day with Sydney from FinTech-Aviv, talking about what did they do exactly. I would like to invite Ifat Bareli. Hi, Ifat. Welcome. So, Ifat, please. Ifat is a business development at FinTech-Aviv, and we have with us also Carl Cohen. Carl Cohen is the co-founder. Okay, here you go. That's for you. For you. Enjoy. I'll teach you.
No worries, thank you. Hi, Shan.
Hi.
First of all, it's a pleasure to host you here. And can you please introduce yourself and maybe talk a little bit about Connected Insurance, your startup?
Yeah, great. First of all, nice to meet you all. I'm Tal. I'm the CEO and the co-founder of Connected Insurance. Connected Insurance is an insurance company. I'm for more than 25 years in the tech/business industry, mostly around online businesses. Connected Insurance is my second startup, and my previous startup was an ethics startup. So I'm not coming from the insurance industry, but it's a nice story about someone's coming from a different industry and trying to adapt technologies, algorithms, and knowledge you got from another industry into, let's say, one of the, it's an old industry, the very traditional, very old industry, the insurance industry. So this is about me.
And can you tell us a bit about Connected Insurance?
Sure. So Connected Insurance is an insurance company providing usage-based risk-bearing insurance for the sharing economy platforms. Now, sharing economy, it's a big name for a lot of digital platforms, which most of you probably use. Starting from ride-hailing like Uber or Lyft, micro-mobility, for example, online, Airbnb for apartment rental, and all sorts of other gig platforms from the DoorDash or Wolt to even today I saw a very big sharing economy platform for dog walkers. So there are all sorts of them. The main thing which makes them a part of the sharing economy is that they're sharing a product or service for short time. So what CI is offering them? CI is offering insurance, right? When you want to offer a product or a service to a third party, you need to include insurance as part of it. When someone is using your e-scooter or someone is driving you with Bird or with the Uber, you need to make sure that you're insured. And in a minute, I will tell you why it's so difficult to get insurance in this market.
So what do you mean? You mean if I have a cat, let's say I have a cat and I just entered into a pet store and try to buy a food for him. So what you will know, you will offer me like a dedicated insurance?
So not exactly. This is more in the embedded insurance arena. It's more like when you are taking, right now there are a few e-scooters in the street, right? Bird, Dime, Wind. You want to take the e-scooter? I don't know if you know, you are not insured.
I don't want
Yeah, if you hit something or someone, you are not insured. We want to insure you, okay? The same when you are driving with Uber, for example, there you are insured because Uber has their insurance, okay? And now it's a challenge because the traditional industry don't know how to insure those businesses. Imagine that instead of providing annual premium, okay, for something that I own, today we own a taxi, we own employees, we own an apartment. Right now, the user doesn't own the property, right? And it's for limited time. It can be a few minutes in the street. It can be a few days via Airbnb. How do we insure it? So the challenge is to insure those properties. And the solution traditional industry today is doing, they're trying to adapt existing products. So if you're a ride-hailing, they will use a taxi model, a taxi underwriting model, but it's not the same. Can you compare a regular taxi fleet to Uber with all the data that Uber has? Okay, so what CI is doing, we are connecting into those digital platforms. Okay, they are collecting huge amounts of data, and we are using this data in order to analyze the risk and better understand the risk. And by doing so, we can get a much more granular understanding of the risk and then price it much better. Okay. Now, not only that, that when you have a great visibility into the risk, okay, you can share it with all the parties. So today insurance is like a black box. Nobody understands it. You don't know what is the risk, okay? You are, for example, a delivery company like DoorDash, okay? And you pay hundreds of millions of dollars, annual premium, hundreds of millions of dollars. And on top of that, you have self-insurance, self-exposure of additional hundreds of millions of dollars. So imagine how expensive is the exposure, the insurance, okay? That you don't know anything about it, okay? You see in the end of the year, the exposure, meaning that the claim that you had and how much money you needed to pay and how much money you pay for the insurance, that's it. Imagine that you got insight, then you can influence on the insurance. For example, if I'm DoorDash, maybe can assign different delivery guys for different deliveries. Maybe I can route the deliveries through different routes. Okay, I can influence on my insurance costs. This is exactly what CI is creating. So we call it transparent insurance. So not only we are providing a risk-based insurance, but also providing the insights to all the parties, to the broker, to the platform, and also to the insurer. And this is a game changer in the insurance industry. Because it's very, let's say, new industry comparing to other industries, you won't find too many traditional insurance carriers operating in this market. This is a totally new segment in the insurance industry. But the nice thing that we see more and more sharing economy, let's say, business model that are influencing our everyday life. We started from the ride-hailing, the micro-mobility, shared mobility, Airbnb. And today, for example, just from yesterday, we spoke with a company that you can share almost anything. In the UK, anything you want to share, you can share it. Whether it's a camera, your laptop, for a few hours to 1 day. So the world is evolving, and especially the millennials, they don't own things, okay? And we are helping them because without insurance, you cannot run the sharing economy platform.
Super interesting, actually. So what's differentiate you, connected insurance, from other like classic insurance industry?
Yeah, so like I said, traditional insurance industry looking at between 4 to 5 factors when they are calculating the risk or doing the pricing or underwriting, as we call it, okay? We look at hundreds of data points, okay? Imagine those digital platforms, think about micro-mobility. Those e-scooters, for example, on the street, they have IoT devices. They're getting a lot of telematics information. Uber, for example, they have a lot of information, not only about the route, but also about the drivers and also the users. Okay, we are getting this data, and we are finding correlation between those data points and risk. So we can find things which today the insurance industry cannot do. And by doing so, okay, we can optimize the risk. And optimizing the risk, meaning that a safe cost for the sharing economy platforms.
So is it safe to say you're creating a new wave of insurance?
We believe it's a new wave of insurance. First of all, in terms of risk management, because it's much more accurate pricing and pricing model. Second thing, imagine today, usually insurance, it's a paper. You're getting a paper and which tell you you're insured. If something happens, okay, talk to us, right? But we're providing tech with the insurance. So not only we are providing the paper, which is important, we're also providing the platform, the technology, the dashboard to control the risk, to manage their own risk. see what happened with the claims, okay? And everything is digitized. So it's one platform which is coming as part of the insurance. So it's insurance and a platform together. And as I said, insurance is a major cost unit for them. So it's not something neglected in their budget, okay? Just to give you a clue, for delivery companies, insurance can get up to 40% of the budget. 40% of the budget just for annual premium for the insurance. Yeah, I'm putting aside the self-insured, the insurers that are managing the exposure, they are managing themselves. We can get to hundreds of millions of dollars. So it's a huge part, which we are giving them the platform to manage it.
Okay. You were one of the first startups that onboard to the FinTech-Aviv Lab program. Can you tell us a bit about what was your experience? What's the value you gained? Anything you want to share?
Good question. So
Thank you.
First of all, I can compare it to other accelerator which we participated, okay, and say this is a different thing. This is not an accelerator, okay. Usually,
you're trying to say we are unique. No.
Yeah, I believe you are unique, and I'll explain why. Usually, when you're participating in an accelerator, this is a program. They're trying to teach you things and connect you. Okay, this is the main thing, but mostly they're trying to teach you things. I believe, and this is what we like with the FinTech lab, that you are not trying to teach us anything. You are working for us. We tell you what we need, and you do it, and you push it. Okay, and I never, and again, we participate in two very prestige accelerator, one in Israel, one in New York. It's totally different. And the way you're taking it is you first learn what the startup needs, and then you're trying to help him. And also the connection that you make are a strong connection, meaning that you're not only doing some kind of a code intro, you're trying to make sure that it works, okay? And this is exactly what we like, and you know, part of the things, you know, on top of that is that behind you is MasterCard and Nel and those giants, which, you know, for us bring a lot of value to the program. So this is my experience with the lab.
Can you share as an entrepreneur, what's your major challenges here in Israel as a startup in Israel?
Yeah, sure. First of all, small market, okay, especially on the segment that we're trying to cover. We're talking about international companies, so no decision is taken here. Also, the insurance carrier in the Israeli market, you know, they're really, really slow. So if you need to spend almost a year, because, you know, those processes are long, unfortunately, you prefer to do it outside. Also, regulation is a little bit more slow compared to Europe, for example, sometimes compared to the US market. And mostly the size. Size is the main challenger in the Israeli market. So there are a lot of smart people here, okay? But you know, for anyone who can do it, I wouldn't do a POC in Israel. I would go to outside the US to Europe to do the POC.
Right. Okay, so what's on the horizon for CI? What are we going to see from you guys in the next couple of years?
Yeah, so like the platform, we are also evolving. So right now, platform is buying insurance because they need to. Due to regulation, you want to run a fleet, you need insurance, okay? But right now, also the state of mind is changing, okay? They started, they need to grow, so they took everything that they can. Okay, I need insurance to work in Israel, bring me the first insurance. I need to operate in Germany, bring me the first insurance. And they paid a lot of money because it's really expensive, as I told you. Now they're trying to figure out how they can make money out of insurance. Someone gave in the previous session an example that airline today is cross-selling insurance for the tickets, right? Free cancellation, that they're selling insurance. So when you want to buy or rent a car via Expedia, you can add with a V additional car insurance, right? Very easy. It's called embedded insurance. So we are talking with the platform and helping them to turn insurance into a monetization channel by offering or cross-selling insurance which is not part of the platform, but can bring value added to the user. I'll give you an example. Let's say today you are renting your apartment via Airbnb, okay? So when your apartment is rented via Airbnb, you're covered because Airbnb are covering you, right? But you have also your own annual policy for your apartment, right? When you will tell your insurer that your house is also used for Airbnb, you will pay very high premium, right?
Right.
So imagine that Airbnb, because they know you and you're already insured while your apartment is rented via Airbnb, will offer you a discounted annual premium, okay? You will take it, right?
Sure, I will.
Yeah, the same terms, okay, but they already know you, okay? So it's like a complimentary, they complete your insurance while your apartment is rented via Airbnb. So this is only one example of many examples, and today everyone, all the platforms, especially the big platforms, they are thinking about how to take insurance with embedded insurance and turn it into a monetization channel. This is the future.
So the future is do not believe the big, the embedded insurance.
Yeah. This is the fit, exactly.
So thank you, Tal. That was very interesting, and I wish you all the best of luck to Connected Insurance.
Thank you very much, and thank you for taking us into the lab.
Sure. Thank you, Tal.
Thank you very much, Yvonne. Thank you, Tal. Next, we have a really insightful keynote about how to mitigate cyber risk you cannot see. For those of you who don't know, cyber is, I'll let Liran introduce them first. So Liran is the sales director in EMEA for CyberIn. We've been actually working together for, say, at least a year and a half. So Liran, please, welcome.
So in the meantime, okay, so we have the presentation. Basically, I'm from a company called CyberIn. We are a cybersecurity software company dealing mainly with risks coming from outside the organization. We work with many financial institutions all over the world, okay? But our main operations are, of course, in Israel. Some statistics before I will jump into exactly what we are doing, and I will give some examples. So those are statistics that we can see in our systems on attacks going mostly against financial institutions. So we can see phishing attacks, especially COVID accelerated this. So we see 300% year-over-year growth of phishing campaigns targeting financial institutions. We also monitor threat actors that are running information stealers, basically stealing credit cards and login information to many services such as bank accounts and digital wallets. And in our platform, we see more than 1 million those kind of linked credentials, which basically I can tell you that in this room, probably at least one of you has his bank account compromised, okay? Those are just statistics. Same goes for stolen credit cards, of course, and Tal and myself did many presentations and demos to a financial institution, and just amazing the things that we can see in our platforms. And same goes for a lot of information coming from the darknet, okay? I don't want to waste a lot of time on the technology itself, just for you to understand. I can raise my voice.
No, you raise, I'll shush.
So I will not bore you with technology, but just for you to understand how we are doing what we are doing. So we monitor organizations from the outside, okay? So we look at the organization as a hacker, as an attacker we look, and we will try to find any vulnerabilities on the organization from the outside. And the other thing that we are doing, we are monitoring the hackers themselves. So most of the hackers will operate from secret classified places we like to call the darknet,
okay? And we monitor the threat actors in the darknet. We monitor them for more than 7 years in our database, and we are able to source more than 1 million new intelligence indicators per day. So this is quite a massive amount of data that we are having. And once we gathered all this data about the company, we are helping the company by issuing alerts, often threats against the company, such as a customer that has been breached, or an employee has been breached, or there was a phishing campaign impersonating the bank, impersonating the company. Okay, I think I will go straight to an example. So I would like to show you a live example of what we are doing with our customers. In this case, this is a bank from the Philippines, but I have the same story with Israeli banks from 3 weeks ago. Maybe I will elaborate on it. So basically what we did here, we detected a phishing campaign targeting customers of this specific bank. So what you can see, I hope this laser will work. No. So you can see here, this is a screenshot from our platform. And on the other side, this is the phishing email itself. So probably some of you seeing similar with your banks. So we detected this phishing email. After we detected, we issued an alert to the bank saying that we found a new phishing campaign targeting the bank. Once we issued it, the bank asked us to conduct a further investigation. So what we did, we went and searched for the specific threat actor operating this server, sending those emails, and we started monitoring his activity in the darknet. This is a YouTube video that he uploaded, but here you can see this is a darknet post, okay? And this is not accessible by us, it's mostly accessible by hackers. And you can see also a piece of code that we found. And by the piece of code, we were able to detect the real person, okay, sitting behind the computer, and he was took into custody, okay? So just for you to understand, at the end of all those digital risks, there is someone that is taking the money to himself, and this is how we help the bank stop this specific hacker from doing phishing campaigns against the banks. I have a similar story from Israel from 3 weeks ago. We found something that looked malicious, and we did an investigation with the banks and also with the Israeli police. And 3 weeks ago, it was announced. We found two, I would say, young men from Lod. Lod is a city in Israel that were doing a massive campaign to steal credit cards from banks. Okay, and the way we found it is because they were exchanging in the darknet either techniques to steal online credit cards, or they offered for sale credit cards. So we gave the police all the forensics evidence, and they are now into custody. I have more time, right? Yeah, so I have time for another interesting example. So the next example I'd like to show you is that we are not just working with financial institutions, we also work with many companies such as big retailers, big e-commerce platforms, okay? So basically when you want to buy fashion items online, there is a very popular scam called refund fraud. Basically, refund fraud is amazing. Before I joined the company, I never heard about it. But basically what is going on is that in the darknet or in Telegram groups, people are offering services to help you get a refund on an item that you bought, but you will not need to return the item. So basically, let's say you buy a shirt, you get the money back, but you still owe the shirt. So the people that operate those kind of activities are offering a split in the refund money. Okay, so if I bought a shirt for $50, I will get $25, the hacker will get $25. So in this case, we found another refund fraud activity offered in the darknet. So again, a screenshot from our platform. We gave an alert, and the specific customer working with us wanted a further investigation. We engaged with the threat actor. In this case, it was WhatsApp, before Telegram. And we told them, yes, we're interested, we want to buy stuff and we want to do refund with you. We built an online fake identity, so the hacker will not know that we are a cybersecurity company helping this e-commerce retailer. So we started the real order of goods from this company. So those two nice people are from my company. They got the boxes with everything, and they even got the money back, okay? And in the meantime, while we were doing this with the threat actor, the company that we are working with did a very close monitoring of our transaction. So what they did while we engaged with the threat actor, they understood in their systems what was the business logic that this specific threat actor was abusing, was bypassing in order to offer those refund services. They stopped this business logic from being abused, and this kind of refund fraud is not possible against this specific customer, this specific company. I can tell you that the biggest things that wasn't the news, one person, okay, stole from Amazon around $250,000, okay, by doing refund fraud. So we found a way to buy, I would say, technology equipment, laptops and so forth, get them back to Amazon, but he will send something else, and still he got his money back, and he stole $250,000 from Amazon. So you can imagine yourself how popular this service is. So basically, this is what we are doing. This is our daily job, and we see a lot of data on many companies. So if you would like to do a scan together with me on your specific company to see what we can see, and if we see any hacker activities going on against your company or any phishing campaign, customer that has been breached, employee that has been breached, feel free to reach me out or reach out. We'll be very happy to run a scan on our system and show you what we can see.
This is unbelievable, Ilan. Really, the case study that you've seen, and I think you've seen your presentation several times, and every time there's a new use case and something happened, but the refund really was truly amazing. So amazing, beautiful.
Yes. I can say just one thing. I joined the company 1 year ago, and I got access to the system with all the massive data. And I was spending the all night searching for stuff. And there's literally, it's endless. It's crazy what is going on in the dark web. So if you've never seen before what hackers are doing, it's really crazy. And this is just two examples, okay, that we have the ability to share, and it's okay to share. We have many other examples of crazy things. We're very happy to share it offline with you. Thank you very much.
Thank you very much, Ilan. Okay, thank you very much, Ilan. We'll move it now for another remote session. We'll have Loredix joining us. So we've seen actually how cyber actually working, we're approaching a financial institutions. Something that is remarkable is the way that they target financial institutions, because on the day one, when they meet the company, they already provide them with a lot of a huge value proposition. So it's regardless of the product itself, the way that they market, the way that they approach clients is something to learn from. Hi, Lon.
Hello.
Let's see if we can hear you well.
Understanding would be great.
Yeah, we can hear you great.
Okay.
Excellent.
Hi, Ron. So welcome to FinTech-Aviv Annual Summit. I know you're in the UK and you can't join us physically. But still, we'd love to hear more about Credix, about personalizing credit products with AI-driven analytics. What does it mean exactly? What do you do? So please introduce yourself and take it away.
Excellent. Thanks, Tal. So let me just share my presentation. Just Tal, let me know if everyone sees it.
Yeah, we see.
Okay, great. Yeah, so good afternoon, everyone in Tel Aviv, and to those who are connecting remotely like me. Obviously, we got the challenging sessions, right? The ones after lunch in the afternoon. These are the challenging ones, so we need to hopefully keep everyone involved. Yeah, so really excited to be here. Unfortunately, couldn't join physically. So I'm connecting remotely. My name is Ran Schriftman. I'm sales director for Credix. Background is in tech and sales and business development. Many years working with companies to help build up their businesses in the UK and in Europe specifically. And yeah, really excited to spend some time with you today talking about smart credit analytics and about our solution. Just as a bit of an icebreaker, obviously I'm from the UK, and the UK is well known for talking about the weather, so I thought that start a bit with that. And I had this whole thing prepared about how the weather here is terrible and how the weather in Israel is great, but according to the BBC, the weather in Tel Aviv isn't that great today. Can you confirm that? Is that true? Is the weather like it says?
Well, it's sunny now, but
It's out now. Okay, all right. Anyway, so it's not that terrible, but I'm sure the next day or two you'll have 27 degrees of sunshine, and the year will continue to be quite bad, especially in the next few months. But anyway, we're not here to talk about the weather, so I'll get on topic. So a bit about Credix. We've got 14 years experience in analyzing alternative data for lending, so credit analytics specialists, starting off as a consultancy, and in the past years really saw the need for providing solutions specifically for specialized lenders, which we're going to talk about today with our smart credit analytics solution. We're working with over 50 banks and lenders. We've been involved in over 20 million credit decisions, have a great group of data scientists within the organization. Headquartered in Tel Aviv, actually, but I think about 50 meters roughly away from where you are today. And we're operating globally. Obviously, I'm based in the UK in London. So really, our focus is on assisting specialized lenders be more competitive with AI-driven credit analytics. And really, when we look at the specialized lenders market, as the name suggests, these are players that are typically smaller than your big main banks, which are focused on very specific segments, very specific products, typically as kind of providing maybe 1, 2, or 3 different types of products, whether they're kind of consumable products, like obviously auto loans could be consumer and commercial, and file loans and so on, as well as commercials, again, SME loans, short-term loans again could be both. Revolving credit, we're seeing an increase, especially in UK, in revolving credit around credit cards and line of credit and so on. So lenders that are focused on these specific areas, this is our focus supporting that. Now, when you look at these lenders, really their unique value proposition is being able to provide solutions to these niche segments, so they specialize in that specific area, and therefore they can provide really a personalized solution. So their value proposition really around, we can offer you a personalized solution and great service. But on the other hand, really, they have a technological disadvantage because the banks obviously have been using data analytics and credit models for many years now, but the specialized lenders really didn't have access to that, wanted to be able to take advantage of that, and really develop
their solution based on expert decision and rule-based systems. So really, credit analytics can provide a great opportunity for these specialized lenders to be able to be more competitive in the market. Now, that's easier said than done. Developing and providing credit models, AI-based credit models, and implementing them is challenging for these specialized lenders. First of all, they lack a lot of historical data, which makes it very difficult to build these predictive models. Second of all, they don't have access to those technological talents like IT as well as data scientists to be able to build those data models and solutions for them. They've really, the DNA, part of the DNA is that expert know-how that they build, the expert know-how in that specific segment. So how do you really take that expert know-how and implement it into a kind of a data model, a credit data model, credit decision model in AI? They also typically sell quite more complex products, which means you can't really use the generic models. And as I said before, part of their advantage is that personalization service. So how do you translate that personalization into a automated credit decisioning product or solution and so on? So if we look into the solution, really it's all about taking what we call underwriting or credit decisioning to the next level. Starting with first of all, automating. Now, some of the lenders already may be in that situation, but first of all, you need to take those manual process of evaluating a credit request manually and underwriting it and so on into an automated system that can take all that information and create an automated decision, which will obviously means faster response times to your request to your customers, but also less resources involved in that process. But once you've done that, then you need to look at how can I optimize that, right? Am I making those decisions accurately? Am I assessing the risk correctly? And by optimizing that, optimizing your model of decision making, you can obviously perhaps approve more loans, so increase the top line, but also decrease your default rate, so reduce your or improve your bottom line as well, right? So improve your profitability by optimizing that, by being able to understand and make those credit decisions in the most accurate manner. So once you've optimized that, then you can move into personalization. Personalization means it's not only about saying yes or no, so approving or declining a request, but being able to offer or suggest a specific product to that scenario. So being able to offer a specific credit offer with specific terms and specific attributes to that specific request based on the application's financial situation and, for example, cash flow. So being able to offer that different offer per application can really help you be more competitive or to then be more competitive and differentiate themselves. So to do that, one of the key elements is being able to leverage multiple data sources. The more data we'll know about the applicant, about the application, about the environment, about the situation, the more we'll be able to provide a more accurate assessment of the risk and credit recommendation. So that involves obviously data coming from internal systems, whether it's a CRM, credit history, transactions, any information that the application or applicant has provided, whether it's third-party data like the credit bureaus, which is obviously very popular in the UK, in the US, and many other industries, and popular elsewhere. As well as open banking, which again is becoming more mainstream in many markets, including in the UK market. And then data partners, whether that's information coming from point of sale information or accounting systems. As an example, it could be, for example, in the car finance industry, it could be information around the car, and property industry, it could be information about the property coming from partners that specialize in data from those specific segments. So really, it's all about understanding what are the relevant data sources that you need to understand for that specific lender, for that specific industry, for that specific segment, that will give you the full picture to be able to make an accurate decision. That's really part of what we do at the first stage, is understanding the lender, understanding where they operate, and understanding from them where are the data sources that are going to be relevant for making that decision. So once we've got all that sorted, we understand the data sources, we're getting all that data in, really the solution is based on the fact that we can build a bespoke scoring model. It's not a generic model, we'll build basically a bespoke scoring model, scorecard for that lender, for that lending product in that specific segment, which will accurately understand that risk and then use obviously AI algorithms that will continuously monitor the performance and continuously improve and suggest better scoring, more accurate scoring that will reflect that risk assessment in a better way. So leveraging all those data sources, all those data points that are raw that are coming in, and deducing from that, what is the scorecard, what is the score we're giving to that application that's going to represent in the most accurate way that risk assessment. And on the second hand, apply the lending policy of the lender, which represents the risk appetite, basically applying that lending policy to say, with that risk assessment, what is your appetite to opt for that specific product, and then automatically combining those two to produce a credit offer recommendation, which will essentially, as I said, not only provide a yes or no, but provide a recommendation of this is the product we should offer them, these are the conditions we should offer them to maximize kind of your market on one hand and your profitability on the other hand. So when we look at, okay, how is that implemented within the kind of technological or IT landscape within the lender? Small Credit Analytics, or SCA, is really a back-end platform, back-end application. As you can see from here, the applicant is really interacting directly with the lender systems, whether it's a CRM, loan management system, or other middleware. So interacting directly with that, and then that lending system is really interacting with SCA via our API to provide all the information about the application, about the applicant, including data from data sources. Then using our scoring engine to build that specific score, policy engine to apply their own policy, AI to constantly improve it, and then produce back a credit offer, a credit recommendation, credit recommendation for that specific applicant. And on top of that, we offer also a back office application that the credit manager can use to continuously monitor the performance of the portfolio, but also configure and add specific configurations and inputs into the system to continuously fine-tune and create the best solution possible for them. So to summarize, our key differentiators are really, we offer a full solution. As I mentioned, these specialized lenders are slightly smaller and can't really afford to build, individual or bi-individual solutions and integrate them all together and so on. They don't have the bandwidth capability for that. So being able to have a full solution, including scoring, policy engine, and portfolio monitoring is a great advantage. Transparency, as we know with regulation, that's really important. So it's not a black box. We really encourage our customers to understand the algorithms and be able to challenge them. The ability to offer a bespoke model that you can build your own specific kind of credit model, credit scoring that leverages your domain expertise and your uniqueness, and AI to continuously improve and learn and continuously fine-tune the system to increase the accuracy. And obviously, last but not least, implementation is critical, and we've been able to implement our solution in weeks for many of our customers, as opposed to months and sometimes years for some of the other kind of solutions in the marketplace. So I think I'm pretty much up to time. So yes, thanks very much. Hopefully this was useful for you and interesting. If you want to reach out to me, you can see my details here. Obviously, if you want to connect on LinkedIn, you can find me on LinkedIn. And have the rest of the afternoon, a good rest of the afternoon, and continue to enjoy this great event.
Thank you very much, Lon. This was great. Thank you very much for joining us remotely. And I hope to see you in person very soon.
Yeah, thank you.
Bye-bye.
Thank you. Bye.
Okay. From online to offline. This is awesome. So we have a fireside chats with, I'd like to ask Karim. Hi, Karim. Karim, the CIO from Into. Now, you might not have heard of Into, but after this session, I'm pretty sure you would like to meet them. So that's this will be yours.
Everyone who stayed after lunch.
Okay, so okay, so Karim, maybe please introduce yourself before we start.
Yes, as introduced, I'm Karim. Nice to see you all. Thank you for having me. Glad to share Intu's story. I'm the Chief Innovation Officer at Intu, which is also short for Invest Together. We're a fintech company that provides access for just about everyone to the alternative investment world, unlocking the opportunities there for individuals like you and I.
I actually need to put your presentation.
Yes, why don't you put the little movie
Yeah,
first?
let's do this so we have some slides to talk about as well. Okay, you'll be the one with
Sure.
yes. I'll be the moderator, you'll be the clicker.
So this in many ways is our motto. We want to make investing in real estate simple, social, and mobile. I'm just going to play this little video. It's very short.
There's a play button.
Very good technical.
Remember how hard dating used to be? Finding your way around the city? Today we're all about making things simple. Investing too. Today we can invest without being an expert. Yes, you too. With Into, investing has never been easier. We do the heavy lifting, and you never have to walk alone. Alternative investments have never been this accessible. Into. It's time to get in.
Okay, now I think my first question will be, how does Into relate into fintech? How does real estate relate into fintech? Where do you see that relation?
Actually, on many levels, which I'll elaborate on, but I'd first like to tell you a little bit about how we started, because I really had the privilege to, together with my partner, Aran Roth, who's the founder of Into, and other partners, I've had the privilege to share this vision to create a real solution for retail investors who are seeking to invest their money in the alternative investment space, but simply didn't have access to it because it's heavily regulated or because that usually is dominated by big institutions. So we created a digital platform that enables just about everyone, accredited if you are in the US, to sign up and access these pre-vetted, optimized investments. And the way it relates to fintech on so many levels actually, because real estate is kind of like an old school thing, but in fact, if you want to look at into from the finance side, we act like an online investment bank, selling securities to our community online.
It's an interesting point of view for that.
Yeah, and then also since we're a community until today, we were founded in 2015. And today we have over 210K users from over 100 countries. And we've transacted on the platforms literally hundreds of millions of dollars in small units of 25K. People buying securities like that online. So in terms of the community, the technology possibilities are endless. A lot of them have already been deployed in our platform, and some of them are we look at. We're talking about anything from crowd wisdom. I can give you like real examples. Like when you look at an investment on our platform, you know it's already being vetted and optimized. You can see who invested in each investment. You can actually connect with them, and we can advise with them. Some of them have already invested with it just so they know what the experience is like. And then everything is done online. You receive your ongoing payments online, your reports, and you really created this new environment for investors who, again, you don't have to be really savvy because you get all the information, everything you need in one place. So we've been deploying a lot of interesting technologies like geo insights. For instance, if some of the members of our community are located near one of our assets, and when I say assets in real estate, I'm not talking about an investment of buying an apartment or a single home. It's not investments like that. These are bigger, complex assets that have already are usually populated, and they actually generate income on an ongoing basis. Again, it's considered sub-institutional or institutional grade of premium investments. So here too, people who are next to the actual asset, they can give you insights because we might not all be real estate experts, but if I were to ask you about the real estate around your living area, you would probably know to give me some real genuine insights about it, right? Just from living there. So that's one thing that we've been leveraging on our system. Also, the way you consume the investments, it doesn't have to be boring like a PDF, right? It can also include VR and AR, live investing, where we actually, people can invest as they watch the properties. It's like a community investment that happens online with a specific amount of inventory, that there's all this FOMO and interaction that's going on. So that's very exciting.
It's beautiful that you focus a lot on your customer's journey and not just providing the solution of how to invest, but also you're very much interested on his journey, that it's satisfying, that it's providing them enough insights.
Yeah, I want to think about it as putting the fun into funding in a way, okay? Because again, the investment world is usually dominated by institutions, and if in the past, I mean, over the past decade, we see people seek more and more opportunities in the alternative investment world simply because they wanted to diversify their portfolio, spread the risk, and increase returns. By the way, we don't recommend that you put all your money into alternative investments, right? We want you to diversify your portfolio. So basically putting 20 to 30%. We think that actually makes a lot of sense if you want to spread the risk wisely. And we figured we have to make it also very accessible in terms of the way we pass on the information to you and how you consume the investment, and not just like dry facts. And obviously that's also regulated, so we have to be very careful about. There's a big challenge of making it extra fun with the different regulation limitations. That's also a challenge that we're seeing.
I think it's a challenge that a lot of companies are facing, but not a lot of them are succeeding in making the real change and allowing their customer base to enjoy such a process. What is your approach towards fintech on the product?
So our product is based primarily on trust. right? You have to trust into in order to invest on our platform. So for us, it's everything from, for earning that credibility. It's not about just the product being very simple to use and seamless. Our investments also have to perform, and Into is not just a marketplace, by the way. We do everything from the sourcing and the vetting, all the due diligence, the optimizing of the deals, all the legal work, and then we bring it onto our platform, and then we continue to monitor the investment until the exit, really. So we really manage the entire value chain, which is very important to understand. We don't just bring together people and money. So in terms of gaining that credibility, it's also very important that our investments perform, and that we provide the right service along the way, and that everything is completely transparent. And that's what we've been doing via our platform. You can actually access ongoing information that is actually something you can read and understand on these personalized dashboards that are interactive, and you can just go in at any time from anywhere, from any device, and see how your portfolio is doing. You can also share your portfolio with other investors. And one feature that I like is that since it's a social network, you can follow people and chat with them. So we have this feature called Best Investors, where you can actually start to follow people and look at their portfolios and how they've been performing, and then you can learn from them. You can see what it's like to invest with Into through their experience, which is nice.
Amazing. What do you believe will be the future of alternative lending? So how do you see the market? So you're very much involved in alternative lending. You have access to investors. You have access to different sponsors, and most importantly, opportunities, right?
Right.
But what do you see as this market? Where can it evolve?
I think it's actually fascinating and ever changing, if you will, because in the past decade, we've seen the shift from in-person to digital, right? That's the shift I've led over the past 10 years doing innovation in this space. But I think that the next major leap is still coming, and we're going to see the transition from actually from digital to the metaverse. Because with everything that's going on in the world, you have to understand there's like a great comfort in knowing that investing doesn't have to be a solitary experience anymore, a very complicated one. You can actually invest from anywhere in the world and with people that are just like you and are looking to do the same thing. So that's one point. I think also until now, alternative investments, they're not very liquid, they're longer horizons, but as new products come in, right, it doesn't only have to be real estate, it can be NFTs, decentralized currencies. We're looking into integrating a secondary market on our platform where people can actually transact the investments peer-to-peer using blockchain technology. So that's like our next aspiration. So it could go to so many places, and that's what makes it super exciting. I think also in terms of the segmentation of the people, if up until now, only people with enough discretionary income, usually older, 45 and up, had to, it's okay, maybe our time is up. Most of our clients are 45 and over, people with more discretionary income, who are more savvy about the investment market, or have done a thing or two in their life. But as technology advances and globalization occurs, and also the regulation evolves, then we're going to see a lot of new audiences come into this space, like younger Generation X, Generation Z and Y, because they're really looking, they're not really interested to invest in the institutions, they're not interested to buy a home. They're actually making a lot of money doing all these like tech jobs. So it's a very interesting space, seeing how young people are really interested in these online investing platforms that keep evolving.
Yeah, we saw a lot of them. You know, there was Robin Fiasco. There was a lot of different things that we saw in this space, and I truly believe that it's only a matter of time that more and more people will join. You talked about 20-30% of their disposable income. That's something that I think it doesn't matter how much funds you own, but it's something that is accessible, and we see different companies providing access in various level of investments. So who will be your typical go-to end client?
Well, for us, it's just about anyone. Right now, we're working based on this regulation model, which I won't bore you with, it's called 506C. So we have to address only to accredited investors, right? So there are about 13 millions of those in the US. Our platform, did I say that? It has over 200K. Maybe, I don't know if I said that, from 100 different countries, by the way. So we don't, of course, we segment our audiences, but pretty much our platform is open to just anyone. Again, we've looked at all the pain points that retail investors may have when they look into going into the investment world, feeling very frustrated that it's very complicated when they have no access. And then we lowered all those barriers to entry via our platform, via technological solutions. So pretty much anyone can enter. Only the one thing, in the US, you have to be accredited in order to invest.
That's a major thing.
That's a big thing, yeah.
Okay, wonderful. Okay, great. Thank you very much for joining me.
Thank you.
And then if anyone here want to approach, of course, Corinne or through us, thank you very much.
Thank you, Tal.
So once you check what happened to the screen, okay, I got it. Hi. How are you? Let's freshen up here.
Let's switch sides for this one.
Yes, perfect. I always said that I wanted to have both. So we'll change the topics a little bit. I don't know. But welcome, God. And we have a lot of visitors online, actually. So why don't we start by introducing yourself and then we'll dive into a little bit to IBEX and what we do.
Of course, so hi everyone, and thank you, Tom, for this great event. Let me tell you a little bit about us and about my background, what we're doing. So we're IBEX investors. We're a US fund. Today, around 1.2 billion in assets under management. Relatively active in the Israeli ecosystem. We've been investing here for about 8 or 9 years. Today we have 2 funds. One is an early stage fund, invests in seed, early series A, and the other one is a growth fund that I co-lead with one of my partners, which invests around 5 to 30 million ticket sizes, mostly B rounds and C rounds. Most of what we've done is in software for the enterprise, whether it's developer tools or fintech or cybersecurity. We've also looked at other topics, but that's really our sweet spot.
Great, so great to have you. And you know, you've been investing for a while, as you mentioned. What do you see as the latest trends, maybe that you saw, even if it's because of a lot of companies approaching to you, or from your stakeholders saying that this is the topic that we want to focus?
Yeah, so great. So we talk a lot about trends internally within the fund. I think we're one of the few funds that can invest in a company literally of any size. So we have an early stage fund, we have a growth fund, and we also have a hedge fund out of the US. So a lot of our conversations enable us to see what's happening right now, what will happen soon, what will hopefully happen in the near future, in the far future. And when you think about this space, there's so much going on. I tried limiting myself to 3 big ones that we're seeing more and more of. Right. One is I think that the word bank is going to be a completely different word in 3 years, 4 years, 5 years, 10 years. And it'll happen in a couple of new directions. One is I think there will be an enormous proliferation of neobanks that cover folks either of a certain demographic or of a certain sector or psychological or work-related need.
There's a lot of topic. We started our day and talked about the current process of consolidation in fintech and in neobanks. That's something that is definitely distinguishable. I think that until today, for the past probably 15 years, the top 10 neobanks are still the top 10 neobanks. Right? So is the market changing? Is it evolving, or just being consolidated by the large players?
So I would say both. I would say there's both going to be a lot of consolidation, but you see, we've met many neobanks. Some will make it, some will not.
But if you just think from a consumer need, right, if you're a digital nomad selling on Amazon, living in Costa Rica, 3/4 of the year, you're probably not getting the right banking right now, right? So you would think there would be a neobank focused on that segment. And then you could multiply that by 25 other segments. And that will either happen via like an open banking ecosystem with the large banks, or we think much more likely with innovative players that are going to create really targeted needs for these types of individuals and these types of segments in the market. But it's not going to look like it looks right now.
It's actually something that we saw a lot in lending, in financing, the hyper-segmentation in financing. So I'm not only providing financing, I'm providing financing for farms, for auto parts, and this specialization is what building trust. Between, so it's something that we haven't seen in neobanks, and it's interesting. It will be amazing to see also this shift in neobanks as well. What can you tell us about maybe some latest fintech investment?
Yeah, I mean, so we've made four we've made four investments this year that are fintech or fintech related. One is a company called Blue Dot, that what they try doing is they try automating the tax implications for enterprises for employee-driven spending. So if you look at companies in the past, there used to be some central procurement guy that would buy a bunch of stuff. And now it's basically folks like you and I walking around with payment cards buying. And it's great for us, it's horrendous for the organization to understand if this specific expense that I made on a Friday is a benefit or an expense, or is it the right data? So what these guys do is they try having deep AI that understands what the transaction is, enabling to semi-automatically submit that. So that's one investment we made. Second is a company called Honeycomb, which is an insurtech focused on the multifamily space in the US, where we found that there's almost no price discrimination whatsoever between good assets and bad assets, and they're trying to take AI and take over that space. Third is a company called Upstream, that what they do is they try to enable companies of all sizes to create DAOs, decentralized autonomous organizations, which is a space that is really, really picking up right now and will drive the future of what an enterprise looks like. So just like you would have, we see the previous wave of this was enabling, for example, buy now, pay later on your website.
Yeah.
Now you will enable the creation of a DAO on your website as well by players like Upstream. And then our fourth investment is called Core Scientific, that creates a carbon neutral infrastructure for compute and for other relevant areas for blockchain.
This is a very diverse portfolio. And I know you mentioned at the beginning that you're doing, very broad, from very early stage, very late stage. So what characteristics do you search in the companies that you filter? Are there any synergies between the portfolio companies? How does that work?
Right, and so we're big enough now that there are some synergies, but we're not assuming any synergies. And any investment is an investment on its own. We have all of the basic stuff, right, that any VC will tell you. We're looking for a super strong team that is going to disrupt a large market and so forth. What I can tell you that we have an innate belief, especially in fintech, that what will win at the end of the day is access to new primary data, using and leveraging that new primary data with AI to create something that was formerly done either manually or in a worse way. So if you even think about, so you talked about payments, right? I'm assuming that any B2B2C, any B2SMB or any B2C that has a broad relationship with a consumer is thinking right now about how to become a fintech company. Right, so the idea is, is there a unique source of primary data? Let's say I have a platform that serves landlords in some way. Can I use that data to know something that is meaningful about them to create a fintech related action, if it's lending or financing or payments or whatever that is? And then can I use AI to do something that is meaningfully better
than what's being done right now in the market. So we use that lens in a bunch of our investments, and I think it's specifically true for FinTech.
I think it's, and we actually talked about it just now in embedded finance panel, and I think it was David, CEO of Unipass, mentioned that every company will be a FinTech company. If you have enough data, if you have enough client, if you have a client base, why not offer them various financial services like we see, from non-financial players like, Uber is the most go-to example, but also T-Mobile with the T-Money. So there are a lot of companies who understand, well, there's a lot of powerful, I can also provide financial services. Combining open banking, combining embedded finance, it's an open market. So how do you differentiate between like the good solutions and the ones you want to have?
So I think one of the, and it's so funny how you probably count on Google, every company is a FinTech company, is kind of the new phrase after saying software will lead the world, that's like the new one. But I think if we take the cynical view, if you want to start a business that will raise venture capital financing, one thing that you can do is you can start an insurtech that has a great story about how you take stuff from the air and sensors and all of that and assess risk differently. But actually assess risk in the exact same way, and that changes 0.01%, but you tell investors a really great story. You undercut the market on price, and then you grow quickly, but your AI is not actually a substantial predictor of risk. So it's really, there's so much noise because it's very difficult to differentiate between a story about AI that is maybe even a great technical innovation that does not quantify risk, than actual meaningful change that can differentiate in an industry. What we try doing is we try getting at that question. Is the access to primary data and the AI models corresponding to that data, does that create a meaningful change in this industry? Or has that not yet been proven? And I think that's the core question that differentiates between value and potential noise.
No, that's a really good starting point to evaluate the companies. Awesome. And so I want to touch on the final notes. When we talk about various trends throughout this entire day, in payments and financing and cybersecurity, one of them was also corporate banking, which is one of my favorite. We had also JP Morgan Chase here talking about how they do corporate innovation. What do you see, or what do you think is a major trend for 2022, both for entrepreneurs to focus, for investors to look into? How do you see that?
Yeah, so we actually released an article around that a few weeks ago on unmet needs on FinTech that we're actively looking for someone to fill. And then there's a bunch, but I think I'll pick one in B2B and maybe one in B2C. I think from a general level, and everyone sees the investing, call it ecosystem in the US, how much that's changed with platforms like Wealthfront and Betterment that automate the investing, and those robo-advisors, as well as Robinhood, and just the increased market share that they've gotten to. But what's interesting is that's basically only happening in two asset classes. It's happening in stocks and in bonds. You're not seeing the same types of investments that professional asset managers conduct that democratize yet. So these guys invest in art. These guys invest in commodities. These guys invest in hedge funds. These guys invest in venture funds, right? That has not been democratized yet. That will happen, right? Even if I go to my bank right now and I say, hey, can you help me with investing? They'll say, well, we have stocks and we have bonds. What would you rather, right? Some mix of stocks and bonds, right? So that for sure will change. So it's, I mean, companies like the company that was just here, trying to be part of that change. And that's on B2C. B2B, right, we have, call it 20 CFOs in our portfolio. I think their work is still way too manual. And we've seen companies try to solve that, but I don't think a CFO should be hedging currency. I don't think a CFO should be managing their liquidity in a way that is so overly manual. You would think that those issues would have been almost automated by now. So I think the CFO suite is a part of the business that will be much more driven by AI and automation in a few years than it is right now. So that, I mean, that's another one we're actively looking for.
Actually, okay, good. There's several companies I know in Israel and that are doing phenomenal work around that. I mean, there's PayEM, you probably heard of, that are doing that in the US, but also I see some here sprouting in Israel, because truthfully, most of the focus was in retail, in terms of fintech and customers, millennials, how we're gonna reach them. I think this, I wouldn't call it hype, because it's not a hype, it's more of kind of a spotlight. So it kind of shifts towards the corporate side, and on our side, we see more and more financial institutions looking for corporate innovation. How do we do that? What does that mean? How can you foster, connectivity in different departments within the bank? So, yeah, that's great. So, God, thank you very much for joining us.
Thank you for having me.
I hope that we'll see you again next year, and we'll see if the trends have been updated and what have been your latest investments. And that's thank you very much.
Great. Thanks for having me.
Great, thank you, Guy. So we have two more sessions, and then we move on to beer and fries. Dutch session. Hello, Yael. How are you? Great. How was the day so far?
Very interesting.
Okay, so I'd like to ask Yael, who was formerly Zeus, right?
Right.
Currently Netom. You want to chair? You want to stand?
Never walked stand.
Okay, so let me get your station while I present. And yeah. Switch your presentation.
Thank you. Okay. Hi, everyone. Thank you for staying at this hour. I know it's a bit hard after a long day. And I hope this presentation will keep you up, but not up at night, as we're going to talk about the dark web and what we can find there. So my name is Yael. I'm the head of customer success at Netom. We provide fraud detection and fraud prevention tools for various of businesses online. And what we are doing is that we are using a more legacy approach, like velocity rules, and we add to that our machine learning models, which is our main part in the fraud detection. And we also have a team of experts, our fraud intelligence team, that are searching through the dark web. And with the knowledge that we're getting from there, with all the information, we feed our models to detect better the behavior of fraudsters online. So let's dive deep. So first, let's start with what is exactly the dark web. So the web, as we know it, contains three main parts. The first one is the clear web. This is the indexed web pages that all the search engine can view and upload when we're doing research. So this is actually only 4% of the web.
Although every time we're doing search, using Google search, Bing search, we're getting dozens, hundreds, thousands of results, it's only 4%. Most of the web, 90% of the web, is the deep web. Those pages are not indexed and can't be just entered by searching for them in Google. And it's actually a good thing, mostly, because this is done for privacy reasons. So those pages will be mostly be able to enter using credentials. So if I did a blood test and I want to see my results, I need to get my username and my password to see those. So it's good that it's not published online to everyone, but only for me. So this is the deep web, and 6% of the web is the darkest point, which is the dark web, and it is very dark place. So what is going on in the dark web? Well, everything that you've heard and more: illegal content, malware, all kinds of honeypots, criminals trying to scam other criminals, because most of the people in the dark web are criminals, and all kinds of false information. There's actually also very little, but there is also good actions going on in the dark web, because a lot of people use it anonymously. This is how you're supposed to use it, and we will talk about it in a second. So this is a place where people can speak freely and take actions and initiate actions for the free world, where they're from countries where it's not allowed to go and protest outside. This is the place where they can use that. So let's dive. Maybe not so fast. 1 second. We said that it's a very dark place. Let's get the right equipment. So what you need to do when you're going into the dark web is not being yourself. You need to mask yourself and do it really, really well. You don't want your real personal data to be there. So what you need to do is first not using your operating system, use VPN service. You should not download anything. I know it looks like the best gift ever. Don't download it. You don't know what will be behind it. Don't use your personal data. Don't use your company email. It may become very uncomfortable situation with your employer. Think 3 times before you click on any link that you find there. Don't trust what you find there, and use network anonymization such as a Tor. So in general note, find someone who's expert in that and use his computer to do it. What can happen if you will expose your personal data on the dark web? So criminals will be able to blackmail you. They can sell this information in the dark web. They can impersonate, use it to impersonate you doing fraud. Somebody can actually think it's really funny to prank you and send to the police screenshots of your personal data from the dark web, and then you will get not so funny call from the police saying, what did you do on the dark web? And also because it's a place where a lot of criminals are staying, there will be law enforcement there looking for those criminals that are not masking their personal data. They will looking for those, they will look for any kind of illegal events happening. So you don't want those also to know that you are there. So now we are ready to jump into the deep dark water. Let's go. So today we're going to focus on the things that are for sale on the dark web. And it's very exciting, right? We are doing today diving, which is very extreme, in the dark web, extreme again, also selling. Who doesn't love a good shopping? So what's on sale? Your data. Not so nice now. Okay, so I'm bringing you today 2 recent examples from our fraud intelligence team and their findings. The first one is a case study of Spotify. So what our team found in Spotify are accounts for sale for Spotify range, I don't know if you can see very well, from $3 to $24, less than parking in Tel Aviv, really good catch. And there are actually the more expensive ones are the one with guarantee. If it doesn't work, you will get a new one. You can also get free upgrades for Spotify. Until now, it doesn't sound really bad, right? And you can also buy followers and plays. So what is the use case here for the fraudster? The fraudster will take all of this, will take over an existing account or create a new one. It doesn't really matter for them. They will upload this really lousy song. It doesn't even have to be a song. It's just something that will sound, that will be a song, sounds like a song, sorry, to Spotify. And then they will have the followers and plays added to that. So it's actually a scam against Spotify because at that moment, this song will be ranked higher and now Spotify will pay to those. The fraudster will get the money and go. That's it. This is how you can scam Spotify. Again, don't use it. So how do we in Nikon when we're doing fraud prevention, what do we do with those findings? So the next case is for one of our customers, which is a merchant in the travel industry. So our team again found this really nice advertising, seems very nice accounts for sale. It's also on sale on Telegram, which is the best friend for the dark web. Even positive reviews, but remember, don't trust what you find on the dark web. And don't also rely on best reviews on the clear web. Also there, it might be reviews bought from the dark web. And what is the information for sale? So the information for sale here is not the account for this specific merchant, but actually it's the account, the email of the customers. So what do they do with those emails? They're going into this merchant website doing, I forgot my password, please recover it. They're getting into the email of the customer, of this user. They recover the customer, put their own password, and from the perspective of the merchant, it's a legit way. Everything is okay. At this moment, this fraudster now can do whatever he wants on this website. Adding to that, that for this whole sale, it was a really good catch. You can get other services as well, such as clean your cookies, use VPN to fake your IP, money transfer account, temporary email address, and you get the whole deal. So what we are doing with that is that our customers, which are the merchants or the service providers or banks, they're sending to us through API all the events such as login, sign up, transaction, and we are taking all this information as long with the behaviors that we find. We can detect the VPN or the proxy, so we can know when it's fake. And all the information that we're looking in the dark web, we're putting into our machine learning models. We feed them with that, and then they know how to detect fraud. And in real time, we can tell our customers if this action was done by a legit customer or by a fake one. So, thank you very much. I hope it was very insightful for you.
Thank you very much. Spotify was a bit alarming, but thanks. So one last session for us to have is a short remote session about opportunities in the CE and reconnect us. So in the past, I think 2 years, we've been working along with the Warsaw Stock Exchange. And we have an opportunity to hear from the CEO of FinTech-Aviv. So we'll hear this in a second. Hi, Rico. Can you hear me? We should hear you now. Hi, good to see you, Rico. How are you?
Fine, thank you, and you?
I'm great, and thank you for joining us. So we're here at the FinTech-Aviv Annual Summit. It's been a very long, productive day with a lot of keynotes, fireside chats, and panels about various opportunities and trends in fintech. It'll be great to hear from you a little bit about opportunities in the sea. Maybe if you can share with us, introduce yourself and the Warsaw Stock Exchange and GPW Tech work, and then we'll talk a little about some of the opportunities you see in the CE.
Okay, so hello again. As told us, I'm the CEO at GPW Tech, which is a company 100% owned by the Warsaw Stock Exchange. Before this, I was a member of the management board in SoftBank Service and in Asseco Systems. Asseco is the biggest IT company in Poland now, and in general in the region, and with some investments in Israel, the United States. Concerning the Warsaw Stock Exchange and the situation that we have now in comparison to other stock exchanges in the region. So we are the biggest. This is the first point. Our capitalization is close to 170 billion US dollars. We have around 770 companies which are listed in Warsaw, and we had the fastest growth in the region during the previous year. So I think that we start after the system transformation 30 years ago, and I can tell that we had a big success in the region. Our stock exchange is bigger than the Austrian stock exchange now. And what we are doing, we are not only based on equity trades, we trade bonds, we trade derivatives. And in the same time, we have also commodities markets, electricity, natural gas, CO2 emissions, etc., etc. So, as you know, all stock exchanges and all profits in stock exchanges depends on the turnover. So that is why we started the diversification a few years ago. But in the same time, we are trying to do the same that did other stock exchanges. I mean, Nasdaq or Deutsche Börse or London Stock Exchange, which means that we start to implement the strategy which is related to a new branch, which is based on technology. And I'm responsible in the GPW Tech for the development of this company, and we started 2 years ago, and now we have at least 4 good products that we are trying to sell In the region, of course, in Central and Eastern Europe, in the Middle East, and Africa. In general, in this region, where we know that we are more competitive than our partners from more developed countries like UK or United States.
So it's, you're being the technological, let's say, arm, and you both produce your own technology and adopt other solutions for your usage and your customers. What is your interest in the Israeli landscape?
We know in Europe, we know in Poland that Israel is very strong in the FinTech field. And we've started the cooperation with you, Tal Sharon, 2 years ago with FinTech-Aviv. I think that we have very close relations, and as I told at the beginning, we have our own products, but our strategy is based not only on the development of our product, on finding new markets for what we are doing here in Poland, but in the same time, we are trying to provide some acquisitions of products that are dedicated for the financial market, for brokers, and for other stock exchanges. So we want to find something which is perhaps not similar, but compatible with what we are doing here. And we had with FinTech-Aviv some good projects, but to this moment without success. Yeah.
We have time for that. I'm not really worried. So which are the most pressing technologies or topics that you're looking into right now when you're searching for?
So perhaps I will tell you a few words about our products that we have.
Sure.
So basically, we concentrate on products that are dedicated to stock exchanges, and we have two very interesting. The first one, this is the TCA tool, a product which is good for the analysis of the micro and infrastructure of the market. And this is good in the same time for stock exchanges and for brokers. Another one, this is a market abuse system, and this market abuse system can be used by the stock exchange, but in the same time by brokers and or by supervisory institutions. And other products, this is the the new Warsaw trading system. The system will be ready in 2 years. And another one that is ready and is working on Warsaw Stock Exchange. This is a tool for the calculation of indexes. We had an old one, and we created a new tool with higher capacities, etc., etc. So as you can see, our products are concentrated on our activity. When we start the implementation or we start to work on a new product, we use our experience from the market. And when we are searching something new in international market, in Israel, we are searching something which will be similar to what we are creating now here, but will be a kind of value added for us for the future. And in the same time, we are able to sell, for example, some products from Israel, some FinTech products in Israel, in the Central and Eastern Europe. So our approach is quite open to a kind of diversification of our activity.
This is so. technological wise, you have products in the, mostly in the markets, in capital markets. We have a lot of discussion today about alternative investments. Is this the field that you're exploring? In terms of, you know, investing into real estate, into art, into other fields other than, let's say, the commodities and stocks and bonds? Is this something that stock exchange is looking into, maybe the foreseeable future?
So, sorry, Tal, I didn't understand your question.
Sorry, I was asking if you're looking also into alternative investments.
Yes, of course. Yes.
Okay, can you give us an example, something maybe you're working on or providing?
So you mean some alternative projects not related to the financial markets, yes?
Yes.
So we created a product which was a kind of our internal idea, a system which is governance, risk and compliance at the same time. As you know, when the company is listed on the stock exchange, they have, developed market, a lot of rules that we have to follow. This is one point, and at the same time, there are in each corporation we have a compliance officer. And our idea was to create a system which will be a kind of matrix combining the management of the risk of the compliance and on the governance at the same time. And we are implementing this product now in the Warsaw Stock Exchange, and we have a very good pipeline concerning this product in corporations in Poland, which are listed on the stock exchange. But this product is completely not related to our traditional field of experience. It's quite interesting, and it's very good.
Beautiful. So, okay, thank you very much, Vito. I think, well, for those of you who want to interact with the Warsaw Stock Exchange, you can reach out to Vito or to us, and we'll see if it's relevant. We'll be more than happy to connect you. Vito, you're summarizing actually our annual summit, so thank you very much. I wish you were here with us, but I know that you had the constraints, and due to the situation in Ukraine, you weren't able to join us physically. But we'd love to host you next time.
Thank you very much for hosting me. Perhaps at the end, a few words about the situation that we have in Poland. During the last 12 days, we've received in Poland 1,200,000 refugees from Ukraine. So the atmosphere in Poland starts to be perhaps not dramatic, but we feel that our neighbor has big problems now. And it's not an atmosphere of war, but it's a kind of atmosphere which is which has, of course, the influence on petrol prices, gas prices, exchange rates between Polish zloty, US dollar, euro, etc., etc. I know that in Israel,
Vito, you're on mute. Wait. Okay, stop. Vito, you're muted. Oh no.
And perhaps a lot of predictions. But I hope that this war will finish soon. Yeah.
Thank you, Vito. We send our regards from Tel Aviv, and I hope to see you in person very soon.
Okay. Thank you again for hosting me, and goodbye. Thank you.
Thank you, Vito. Have a good day. Bye-bye. Well, this summer is a very intense day of content that we curated for you. So thank you everyone for joining us. Thank you for all of our audience remotely who've been, adequately joining our side and watching. We'll have all the content online, of course, and you'll be able to log in and see everything. I think it's important, really, we finished with retail with the Warsaw Stock Exchange and the notion about what's going on in the world. So we talk about fintech, talk about technologies, but still there's war waging right now, and I think there's also, in war some additional opportunities that we should look into and be a bit more concerned about it. So regardless of that, we're gonna finalize now. Thank you everybody for joining. What we're gonna have now is